accounting is it's something that is very, very easy, and it's easy to learn, it's easy to utilize, and it's something that you really, really need. Without accounting, a lot of businesses will have collapsed actually without accounting. So accounting is something that you need the knowledge of, whether you are an accountant or not. If you're running a business, that's why you find out that people running different businesses will go for MBA, Masters in Biz Admin. And if you are doing MBA, you will know that accounting is something that is very, very, very crucial, that you have to, the prerequisite course for that. So I'll share my screen with you shortly. Okay, so let's see. I think this is what we have. Okay, I think this is it. Okay, can you see my screen now? Can you confirm?
Yes, we can. I can. Can we see the screen?
So if you can, I believe everybody else can.
Yes, thank you.
Yes.
Okay, so we are going to be dealing with business accounting, and just like Joke has said, we're going to have like 2 different sessions. I will take care of that part where where you talk about your books, why you need to keep your books, how you need to keep your books, and all of that. So Joke will do justice to the facilitators. Myself and Femi Ogundele will be, doing that. I think his profile has changed a little, but they will read it when it comes to that. So, so one of the objectives of the course is to explain the basic accounting concepts and terminologies and reason for preparation of accounts. And we'll introduce you to the concepts, the methods of bookkeeping to participants, and then we'll empower you with the knowledge of how to maintain systematic tracking and recording of business transactions. Then we'll show participants how to generate financial statements for financial reporting, and then we'll teach them the basics of finance and then accounting for effective business management. Okay, so I'll give you a background, just like I've been trying to do. Accounting is one of the important skills that you need to possess as an entrepreneur. And in the early, say that again. Is anybody saying anything? Okay, like I was saying, I said it's one of the most important skills that an entrepreneur needs to possess. So in the early years of building your business, you may not be able to employ an accountant, which is the case in most cases, because you're still trying to figure out how your business will grow, still trying to figure out how you do things, still trying to figure out the business itself. So you may not be able to afford to pay, pay a professional to come and look at your books or to come and help you prepare your books, and you may not be able to employ a full-time accountant. So I think it's important that at that early stage, you at least have the basic understanding of how to put your books in order, and then how you can then run the business with the little available funds you have and then still make profit from it. So it's important that you put an accounting system in place, right? I said that already. And it helps you know whether your business is profitable or not. It gives you an idea of the size of your company, and it helps you to decide on what to do and what not to do for both the present and then the future. All of us know, even the Bible will tell you that money is important. Bible says that money answereth all things. So all things will include your business. So as an entrepreneur, you need to understand how money leaves you and how money enters into you. That's an accounting skill that you must learn. So I will take you through introduction and basic concepts of accounting, and then I'll take you through the bookkeeping and then statement of accounts. And then Femi will come and take budgeting and planning, and then he will also do the interpretation of published financial statements. Now, whatever we're teaching you here are just the basics, because what some of us learned for 4 years, Joke and Co are asking us to come and teach you in 1 or 2 hours. So if you require more explanation, or you have a lot of more questions, she will make available my phone number and my email address so you can get in touch with me. And then I'm going to have to give you case studies that you will answer and then send back to me. So it's important that you listen very well. because I believe it's going to form part of your assessment. So let me go through the introduction and the concepts of accounting. So what is accounting itself? I'm sure that everybody here will know what accounting is. Just like I explained earlier, is a recording of financial transactions according to storing, sorting, retrieving, summarizing, and presenting the various reports and analysis. Accounting is also a field of study or a profession dedicated to carrying out those tasks of analyzing, summarizing, retrieving, and all of that. So it's a process of recording, classifying, summarizing, and communication of financial transactions for the purpose of making informed decisions by users of the accounting information. So basically the keywords you should know that needs to be there when you are defining accounting is recording, classifying, and then you're summarizing, and then you communicate. So I'll use the same scenario of ladies going to the market again. Before you go to the market, you write a list, Abby, and when you come back, you tick that list. So basically, what accounting is that as you are going to the market, women may most likely go to 2, 3, 4 different markets. Abby, each of the markets, they know what they want to go and buy in those markets. So they write a list according to that. So first of all, they record. Second, they classify into the various markets. Abby, at the end of the day, they summarize it and then they communicate it. So in a case where, I don't know whether some guys do it, but I understand some people told me some guys do it at home, that when they give their wives money for soup, when the wife come back, we say, my Oga, this is how we spent the money. So that's the communication part of it. So basically, like I have said, recording must be in that definition, classifying must be in that definition, summarizing must be in that definition, and then communication must also be in that definition. So the information that is recorded is not just an information, but it's financial transactions or financial records, which means that accounting, and that's one of the disadvantages of accounting. Accounting is not so concerned about the other qualitative factors, but is concerned about the quantitative factors, which means that is the money that I spend that I actually record in accounting. It really doesn't take note of all of those other things like who is the person that bought my shares? Did anybody buy share in the company? How many staff do I have? What quality of staff do I have? You know, accounting is not so pertinent, so concerned about all of those. Anything that has to do with financial is basically what accounting deals with. So, and like I said earlier on, I said that no business can actually succeed without proper accounting systems. And we've look at it through the years. And I think that's one of the major issues we have in this country. A lot of businesses don't go from one phase to another because perhaps they did not, learn to do the proper accounting businesses. For you to move from your small business to a bigger level, you need to at least have recorded business. You need to have recorded your books. You need to know whether you're making profit or not. I cannot overemphasize that. That's very important. So as your business grows, a system needs to be put in place that tracks and records the amount of money that goes out and comes in. You determine the class of the account, you record belonging to, then you summarize all the records, and then you use that to inform your decision. For example, sometimes, when you think that a particular line of your business is making money, but perhaps because you're selling, but when you now do a proper analysis, you do your records and all of that, you realize that the area that you are not really selling very well may actually be more profitable than the area where you're selling a lot. So there's a difference between your revenue and then your profit. So, accounting is what gives you informed decision about some of these things. And that's why, like I said earlier on, it is very, very important and crucial that you have a proper understanding of that. So the accounting functions will include your management accounting, will include your financial accounting, will include your internal accounting or internal auditing, will include your tax accounting, and then your cost accounting. So our focus here is both financial accounting. My own focus here and right now is financial accounting, right? So Femi will discuss about your cost accounting, and then he will do some part of financial accounting too, which is interpretation of financial records. So management and cost accounting is what Femi will take, and then I will take financial accounting. So financial accounting is that type of account that utilizes accounting transactions and transforms them into consolidated financial statements. Each of these financial information will help you to communicate the common reports to business, of the businesses to, to the users of the financial statement. Okay, so basically the three things you should be concerned about as an account or as a business owner, or the three basic reports that they will generate will be your balance sheet, or some people will call it statement of financial position, your income statement or your profit and loss account, and then your cash flow statement. All these three are very, very important, and they are somewhat interrelated. So, so why do we prepare accounts? So as an entrepreneur, you need to prepare your account. You need a proper accounting system because it will help you it will help all the users of financial statements. So who are the users? The entrepreneur, investors, managers, and other stakeholders. So when I say other stakeholders, who do we mean? But what do we mean by other stakeholders of the business? Employees are also stakeholders of the business because God forbid, if the business shuts down, employees will lose their jobs and they may have to start looking for another job. Investors, your competitors are also users of your financial statement because they need to know within the industry who is doing well and what they are doing so that they can also, look for ways and strategies to actually meet up, and then so that they can also quantify the entire industry. Government is also a stakeholder because they need to know how much profit you are making so that they can tax you and all of that. So basically, so it will help you as an entrepreneur to determine the worth of your business. Number one, that means this business that I'm even shouting, how much is even the entire business worth? Your accounts will help you to determine that. Number two, bottom line. Bottom line for some people is how much enters their pocket at the end of the day. As a business owner, how much do I get as dividend? How much do I make from this company? That's the bottom line. Some people will say the bottom line is also profit. So I also agree with that. And you also need to understand that it will help you determine, particularly your cash flow statement, will help you determine the availability of cash within your business systems. What do I mean? You may be profitable, but you may be stranded when it comes to cash. There's what you call your working capital, which means money that has to flow with your business. No matter how viable your business is, if you have so much money outside, that business cannot continue to run because you need money to buy goods. If you're into buying and selling, you need money to buy the goods that you will sell. So if you use money to buy goods and you sell on credit and you have not received your money back, you might be able to, do you understand? You might not be able to continue with that business. So cash flow statement will help you. You see how the money comes in, you see how it goes out and all of that. And then even your financial statement will tell you, your balance sheet will tell you debtors. How much are they owing me? So you can do a debt to equity ratio. You can do a ratio of your debtors to your sales so that you know how much of your sales you are actually collecting as cash and how much is outside. So that is also very important. You also need to know the performance of your business, whether your business is performing well or not. And then when you prepare your account, you have to calculate your tax. So your accounting system will help you to understand what your tax obligation is. Shareholders well too. You need to know how much your shareholders. Sorry, hold on. Sorry, please hold on a second. Okay, thank you. You need to know how much the owners of the business, how much they have in the business and whether it has increased or it has reduced. And then it also helps you know your debt. How much are you owing? So we dive into the deep now. We go to the basic accounting concepts. So these concepts are more like a guide and they're the rules of engagement. Because if you're going to a war, you need to understand the rules of your engagement. So we have some basic rules and assumptions upon which we rest all our work when we're preparing financial statements. Those rules are referred to by various terms, including postulates, concepts, principles, assumptions, and then fundamental accounting concepts. But for the purpose of this class, we'll say they are what? Accounting concepts. And accounting concepts are about, we have about 5 of them or thereabout. So you have the accounting entity concept, you have the going concern concept, you have the consistency concept, you have the conservatism concept, you have the accrual or matching concept. So I will start with the accounting entity. So the accounting entity is the business unit for which the financial statement is being prepared. The principle of accounting entity states that there is a business entity separate from the owners. I'm sure you must have learned that during the legal business, the legal classes, where they told you that there are two different individuals. I am different from my business. I run Ajox Consulting and Co. So I am separate from Adeleke Ajose. So the business entity is separate from the owner. So we can say that the business entity is what? Is a different legal entity, which needs to be treated as such. So the accounting concept says that clearly. We're assuming that you're different from your business. So you don't mix your money with the money of the business. Whatever expense you run, you don't mix it with the expense of the company. Whatever money you make as an individual, you don't mix it with the money of the business. They are two different things. And that's why they will advise that you always base yourself on salary if you're a business owner. And I hope some of us are doing that already. So we look at the going concern concept. A business is assumed to have an infinite life, which means that the business does not have an end. It will continue until perpetuity. Therefore, the accounts are prepared on the assumption that the business will continue for the foreseeable future. So we all know that businesses do not, at some point they have to cease, they have to end. There's a provision for that. That's why we put this foreseeable future, which means that as far as you can see, as the owner of the business, you see that the business is still going to continue. It's going to continue. It's going to continue. It may take a different shape or form, or you might even decide to diversify, but that business is assumed to be continuous for the foreseeable future. So we'll continue to the consistency principle. So the principle of consistency states that each individual enterprise must choose a single method of reporting and then use it consistently over time, which means that you cannot choose one method. You have basically two methods. You have the accrual basis and the cash basis. For example, you cannot decide to use accrual basis this year, and then next year you're using cash basis, and then the following year you go back to accrual basis, and then following year you go back to. You must be consistent with the practice you're doing. You must be consistent with whatever method or technique you are using. And in terms of measurements too, you also have to be consistent, which means that if, for example, I prepare my accounts between January and December this year, but the next year I cannot come and say, no, I'll prepare from January to March, upper year, and do 18 months account. No, it doesn't work that way. You must be consistent with whatever you decide that you're doing. And if you have to change it, you get to a point you change. Whatever you're changing to, there's a reason why you're changing to that. You must also use it for a period of time, over time, and then you can change if you want to change again. So on to the conservatism concept. Accounts have a downward measurement bias, preferring understatement. Accountants have a downward measurement bias, preferring understatement to overvaluation. Okay, so what that means is, as accountants, I want to be conservative. If I am measuring my income, I'd rather choose the lower band of the two bands, which means that if I am projecting or budgeting that I will make between 4 million and 8 million this year, as an accountant, I will choose 4 million when it comes to income. And then when it comes to expenses, I will choose the higher band. That's conservatism. So conservatism states that you choose what? Basically like the worst case scenario when it comes to with your records, your recording and all of that. So you choose the lower bands of that. You rather underestimate than overvalue. And when you're valuing your business too, you say the value of this business is, say for example, is between 8 million and 15 million. As an accountant, I would rather choose that 8 million than choose the 15 million because I need to be conservative. If I decide to choose 15 million rather than 8 million, what if in the nearest future, the business is actually not up to that 15 million? Then what happens? So that's basically one of the things that we'll consider, one of the concepts we use when we're preparing financial statements. So, and we go to the last, to accounting and matching. So income and expenses should be included in the income statement at the time of the transaction or the event took place, not when cash relating to the transactions have been received. So that's the accrual concept. So what that means is, I'll give an example of that. If I am buying goods this year, right? And I have not paid for that goods this year, and I'm paying for it next year. Accounting principle says that when I'm preparing my report or my accounting books this year, I must include that. Despite the fact that I have not paid for it this year, I must include it in that year that I bought it. I cannot say that because I've not paid for it, because I'm paying for it next year, and as such, I have to record it next year. No. It means that if I'm buying the goods this year, even though I may not have paid for it, I will still have to record it as purchases. Now, why that is because if I'm buying the goods that I'm selling and I buy for this year, don't forget that I will have sold some and I will have received money, even though I have not paid for the goods. So I need to match, that's where the matching concept is called. I need to match my income and then my expense together. So there will be a deficit if I'm buying the goods that I've not paid for, and I'm selling, I'm receiving money. There will be a deficit somewhere because I've not recorded the expense side, I'm recording the income part. So there will be a mismatch. So that's why we always state, that's why we always assume that income and expense should be recorded in the year in which the transaction has taken place. So sorry. Okay, so we go to the accounting equation now. So this one is very, very, very easy and very simple. The accounting equation states that it's a very simple formula. You know that in any business, you have money that you have put into the business, right? And that you also have assets for the business. You probably have used that money to buy some assets. For example, for those who are involved in tailoring business, you use your money as an individual to buy sewing machine, to buy what else? Iron, to buy table that you're using to sew, right? So those items you bought are your assets. The money that you use to buy all those assets, whether it's your own or whether you borrowed it, are either your equity or your liabilities. So if the money that you're using to buy the assets is your own, it is called equity, right? If you borrowed the money or you collected it on credit, it is called liabilities. So at every point in time, your total asset must be equal to your total equity plus what? Your total liabilities. Let me put it another way. Your total asset minus your liabilities will be equal your equity. For those of us that did maths, you know that you can juggle things around on each side of the equality sign. So if you're moving liabilities to the other side, you know that the sign in front of it becomes minus. It's that simple. So, but I've explained the first part. Let me re-explain that formula again. All the assets you have in your business, either you bought them with your money, or you borrowed money to buy them, or you collected them on hire purchase, or you have not yet paid for it. Either way, it is a liability. So the money that you put into that business to buy all those assets is what you call what? Your equity. All the monies that you borrowed or that you have not paid is called your liabilities. So the totality of both your liabilities and your equity will give you what? Your assets. So it's important that you understand this very, very well. Okay, so I think I've been able to do justice to this. So equity is also called the value of your business or your business worth at every point in time. Okay, so bookkeeping concepts and methods is what we're going to right now. Okay, so accounting and bookkeeping are related. They are quite related in a particular way. We say accounting, we say bookkeeping. Yes. We sometimes use both interchangeably, but they are different. Bookkeeping, for what it's worth, or for the way they call it, is what? Bookkeeping, which means that you keep your books. While you cannot have accounting without bookkeeping, you can have bookkeeping without accounting. Excuse me. So, bookkeeping is a part of accounting, so to speak. So, bookkeeping is you are keeping all your books. What does that mean? So the example I gave at the beginning of this class is what you call bookkeeping. I have a list of items I want to buy when I go to the market. You know, I record how I bought it. After I bought it, I looked at the difference. I recorded, and you get. I just basically writing down all of the financial transactions is bookkeeping. You have one note for your sales. You have one notebook for your purchases. You have another notebook for maybe the goods that were returned. You have another, notebook for all the monies that you have put into the business. You have another book for all the people that are owing you. You have another book for all the people you are owing. All of that is what you call what? Bookkeeping. So the first step in any accounting process is what you call your bookkeeping. So it involves every facet of recording financial transactions. So every time money is involved, you write it in a particular way, just like I just explained now. So that's basically bookkeeping. So bookkeeping, there are two ways that you keep your books. You either keep cash transactions or you keep it in accrual form. And then I think you should actually do both. Accrual basis will actually do both. So bookkeeping can be very labor intensive and time consuming, but it is by far one of the most important parts of accounting, because without it, it's like the foundation of accounting itself. So all of the cash transactions you are doing, you are transferring money to somebody. As you're transferring, make sure that in your, in the comment section or in the whatever narration section, you put what the money is meant for. Those are part of subtle bookkeeping methods that we need to do. Because those days when we were talking about when accounting was founded, those days we normally would either do trade by barter or you do pay cash. But these days you do transfer. So part of your bookkeeping methods is that as you are transferring money to somebody, make sure that you put the purpose for which that money is meant, so that when you eventually want to put your books together, you want to do accounting, you can always go back and you know what the money is meant for. Because, I mean, how many of you can state what you used a certain amount for 6 months ago if it's not properly written? Somebody will say that the faintest pen is actually better than the brightest of memory. So it's important that you do all of that. That's also an advice. So, but the accrual basis, financial transactions are recorded regardless of whether money was paid or not. Right? If somebody bought goods for you and has not paid for it, you do not say because the guy has not paid, you will not write it down. That, okay, when he pays, you write it down. No, you write it down. Then you too, you go and buy something on credit and you have not paid. You don't say because you have not paid, you will not write it down. You will write it down. So, even financial transactions that do not involve movement of cash needs to be recorded. So that's what we're saying, that's what the accrual basis means. It means that whether they involve cash or they don't, you have to record them. So in the accrual basis or the accrual method of doing things, this method of bookkeeping require a double entry accounting. So we'll get to double entry principle when we get there. We're not there yet, but we'll get there pretty soon. Okay, so I believe that all of us, okay, if not all of us, most of us are actually running businesses. So for the small businesses, I would like to give some very, very subtle tips that are very important. There are 5 tips, but they're important. And there are good habits that will help you avoid your costly errors that may crash your business. Number 1, you have to plan for major expenses. I gave an example of a tailor who is buying sewing machine, buying whipping machine, buying iron, buying a generator and all of that. So you will know as a business owner that at some point, this generator will pack up, particularly the way we use it in this side of the world. This iron may stop working one day. This sewing machine may stop working or start giving issues. So you need to begin to plan from day one when you bought that asset to replace it. You may also know there may be a major expense you're planning to do in the future, a major event you're planning to do in the future. You need to plan for it. As long as you're going to spend money, big money, you need to start planning for that so that it doesn't just creep up on you like that. So one of the advice I'll give or tips I'll give is you plan for major expenses. Number 2 is that you track your expenses. You have to track your expenses. Whatever you spend, like I advised earlier on, even if you are doing a transfer, in the narration, put what the money is meant for. That will help you. Record deposits correctly. Now, there are different types of deposits into your bank account. Some is your money that you're putting into the business. You're using your money to buy something. So you need to record it properly. If you're depositing the money, you're passing it through your bank account. That's different. That one is equity. When you sell goods and money is coming in and somebody's paying for what they bought, that's sales. So those are 2 different things. You need to be able to record them separately. And for tax purposes, The reason why you also have to record them properly is because for tax purposes, they may take your, your investments into your business as sales. When it comes to VAT, value added tax, they may do that. So I'm sure that when you get to tax class, they will explain that better to you. So make sure that you record your deposits correctly. Set aside money for taxes, also very important. You don't want the tax authority coming to put a sticker on your door, sealed for non-compliance. So you need to set aside money for that. And then when you sell, you know you're supposed to add VAT. That VAT, you're collecting it on behalf of government. So please don't chop it too, because a lot of businesses do that. They collect VAT and then they chop it as if it's part of their money. No, you are an agent to the government. You are collecting that VAT on behalf of the government. And you should, as such, what do we call this? You should actually make the payments to the government. So keep an eye on your invoices. Now, this is very important for cash flow purposes. Goods, when I say invoices now, it means sales. For some people that are selling on credit, you sell to somebody and you do not collect money in 30 days. Meanwhile, when you are buying on credit, they are collecting their money from you within 30 days. You are collecting your money within 90 days. There's a 60-day gap, which will have a negative impact on your cash flow. So you need to keep an eye on your invoices. You need to look at it critically and know when somebody's owing you money, know when to collect your money from other guys, and know when not to give credit to certain people. So keep an eye on your invoices. Okay, so let's go to the bookkeeping basics. All of these ones, I'm sure that some of us are familiar with this, but I'll go ahead and still explain it. Cash. When you say cash, what do you mean? Cash is a current asset, and it comprises of currency and cash equivalents. Usually includes your bank accounts, marketable securities, government bonds, bankers' acceptance, and all of that. That's what cash is. Either your raw cash or what you have in your bank, or if you bought treasury bills, or you have your money in piggy bank, all of those things, in short-term investments like that are what you call cash. When you say sales, this is a transaction between two parties. Whether you're a buyer, you always have a buyer, and then you always have a seller. Whether it's tangible, whether it's goods or service, right? So you do that in exchange for money. You have to record this in a timely and accurate manner because it's critical to know whether your business will stand or will not stand. Purchases. So purchases are the amounts, they are things that you buy to resell. For accounting purpose, when you say purchases, they are mainly your stock, the things that you buy to resell, whether they are goods or whether they are services that you buy to resell. So, for example, if you are into trading, okay, let me still use the example of a tailor. You are buying fabric to make and sell. So your purchase will be your fabric. Now, if you are buying machine is not purchases in this case. So you need to understand the difference between you are buying an asset and then purchases. Fixed asset and purchases are different things. For purpose of accounting, your purchase will only include the things that you are buying to resell or the things that you are buying to convert to resell. Okay, that's purchase. Account receivable. If your company sells and you are not collecting your money immediately, that's what you call receivable. Receive, just like the word says, receive able. There are things that you need to receive. Monies that are outside is also called debtors. Your money that is outside that you're trying to receive is what you call accounts receivable. Accounts payable. Okay. So other people's money in your own hand. So account payable is like the opposite of account receivable. Other people's money in your hand that you are supposed to pay, is what you call accounts payable. Like the name is receivable and payable. Please don't get confused. Receivable is what you are able to receive, is what you should receive. Payable is what you are able to pay or what you are supposed to pay. So we need to understand the difference between both. Okay, so we go to inventory. Inventory are the products you have in stock to sell. For example, purchases most times will lead to inventory because you have goods you've purchased certain goods and then you have it in your stock. Inventory is like for the tailor now, all the wool they are buying, they are the inventory. All the fabric they are buying to make into clothes, they are inventory, and all of that. So payroll expenses, these are the salaries and wages that you pay to your employees. That one, I don't think I need too much explanation about that. Payroll is the same thing as salary. Now, you also need to understand that payroll will include the cost of taxes that you are deducting from their salary to remit to government. It will also include things like pension, things like HMO, anything that has to do with your staff cost is called payroll expense. Okay, so we go into the meat now. So we go to the double entry principle. The double entry principle is very easy. Like when they say justice, you know, in law, justice is, you have a scale where with the blind woman that you have on one side must be equal to the other side. That's exactly what double entry principle is like. So it states that for every debit entry, there must be a corresponding credit entry and vice versa. Which means that for every debit entry, there must be a corresponding credit entry, and for every credit entry, there must be a corresponding debit entry. It means that one account is paying, another account is receiving. There's no way that somebody will pay and the other person will not receive. Payment must be equal to receiving. That's what double entry principle is telling us. So for explanation purposes, we're going to use the T format to do this. I'm sure you can see my screen. So in this case, we're doing an exercise. This is like an example that we're doing. That somebody has started a business, a perfume business, right? With 500,000 naira. So when you're doing your accounting, how do you record it? First of all, you need to determine the two accounts that are involved in this case, right? You need what you call the receiving account, and you need what you call the paying account. Okay? So in this case, what are the two accounts that are involved? In this case, you have the capital or equity account, right? Because she's using her money to start the business. And then you need what you call the cash or bank account. Those are the two accounts that are involved in this particular exercise. So next question is, which one is receiving, which one is giving? Cash or bank is receiving because the money is going into the cash or bank. Abi? Then capital, which is equity, is giving, which is what? Credit. Is on the credit side of it, right? So in this particular double entry, this one now, an increase, you need to note that an increase in your cash or asset, it will always have a debit balance. We leave it to debit balance. We will always have a debit balance. Increases the debit balance. A decrease in your cash or asset will decrease that. For liability is different because an increase in liability will increase your credit balance. Same thing goes for decrease in an increase or decrease. Just basically the opposite of what you have in asset is liability. Okay. Okay, so example 2. Somebody bought a domain name and then set up her online store, 50,000, and then pay cash on 5th of January 2020. So as at the time this guy is buying, as at the time this person is buying and is paying at the same time. The same lady that has the online store, because she's selling perfume, Abi. So she has an online store, and then she's buying a domain for that. So how do you now record the transaction of the domain she's buying? What are the two accounts involved again? Online store, in this case, is an asset. So I'll choose to call it an asset. And then cash is also cash, it's also an asset. So the two accounts involved will be the online store asset account and then the cash account. So she deposited 500K inside her account already, Abi. That money is there. Now she wants to use part of that money to pay for domain name. So she's using 50,000 out of the 500,000. So how do we record the transaction? Again, who is giving, who is receiving? Now, because cash, you are paying out of cash, money is leaving cash, you have to credit cash, and then online store, which is an asset account, is receiving the 50,000. So that you record it as a debit in your online store account. So that sorts out that those are the entries you need to pass in this case. Number 3, she bought perfumes worth 300,000 with cash, right? What are the entries you're supposed to make? Maybe at this point, based on the other two, what do you call it? The other two, sorry. explanation I've given, maybe I should allow somebody try to answer this question and tell me why we did what we did. Do we have Joke? Are you there?
Yes, I'm here.
Okay, so can we unmute and then ask to have somebody to anybody who is allow them unmute. Anybody who wants to answer should please answer.
Okay. All right. Just 1 second. Yeah. They can unmute now. Yeah.
Okay, so guys, can anybody answer this the question? Number 3, she's buying perfume worth 300,000 naira. Why did we make the entries we made? Anybody?
I think because for every transaction there should be double entry. For every purchasing, there should be corresponding.
Okay, so let me help you. The guide is, first of all, determine the 2 accounts that are involved, and then you now state which one should be debit and why, and which one should be credit, right? Okay, so I'm listening.
Who was speaking?
I'm listening, oh.
Can you please repeat the question?
Okay, so the question is, if you can see my screen, number 3. This same person that is starting a business, she's buying perfume out of the 500K that she has inside her cash or bank account, right? So how do you record the transaction? Look at number 3 on my screen. That's your expo, but then you have to explain why. Oh yeah, over to you.
Okay, can I answer the question?
Yes, please.
Okay, I think the reason why is because she's buying perfumes worth 300,000. That is a debit.
Debit is a debit. Which account? First of all, which accounts are involved?
It's a double entry system. It's a double entry system, debit and credit.
Yes. So, but you have 2 accounts, like I've been trying to explain that. For example, in number 2, you have the cash account and then you have the online store account. So in this case, you have 2 different accounts that are involved. So what accounts are involved?
We have the purchases account
purchase and
and
the cash
account.
Thank you very much. So which one is receiving and which one is giving?
The purchase
is receiving.
account.
Purchase is receiving.
Receiving and
Cash
the
is
cash
giving.
is giving.
Thank you very much. It shows you guys are following. Perfect. You guys are the best. You're the very best. Thank you very much for that. Okay, so let me continue with what I've been saying. So I assume that number 4 shouldn't be an issue. Should it be an issue? Or maybe we should discuss that too. So this time around, because the 300,000 perfume she bought is not enough to sell, she had to go and buy from Diego on credit, right? So can somebody explain why we have what we have here?
I will give it a try. Because she purchased it, it will be 2 accounts. There'll be a purchase account and there'll be a creditor account because she bought it on credit. So the purchase account is receiving the account. So that one, the money, while the creditor's account is coming out. Money is coming out of that place. So both of them will be debit.
Money is not coming out, but money has not come out yet.
It hasn't come out, but it's planned to be. It's like accrual. It's like what you're saying for accrual. That once, even though you have not given it out, it must be documented. So as far as I'm concerned, money hasn't left in physically, but money is living there.
Yeah, you are hotter than fire. Thank you very much. Shows you are following.
Okay, sir. Sorry for interrupting. Please, but before we move on, I just wanted to verify. So this is a separate transaction aside the 300,000 naira transaction that was carried out.
Yes. So
Yes.
what another 300,000 naira?
Under these purchases, I can see that it's not a replicated activity. So is it that is a separate activity because of the creditor nature of that transaction?
Ideally, what you should have in your purchases account should be 300,000 and then another 300,000. Do you understand? in your purchases account.
Yes.
So it's like she now has stock worth 600,000. Do you understand? Because
yes,
she bought 300,000 worth for cash, she bought another 300,000 for on credit. You get it?
Yes, I do. But I just wanted to verify. So, because the second transaction is a transaction on credit, that's why we created a separate purchase account for the credit.
No, ideally it should be the same.
That's what I'm trying to verify.
Yeah, it's the same. It's the same one. Does that answer your question?
That I just had to verify.
Okay.
Yes, it does. It will be in the same account. I just wanted to verify that.
Okay, that's fine. All right.
Thank
you. We move on because of time. Okay, so the trial balance. So I'll quickly state something right now in this trial balance matter. We have 4 classes of accounts. I'm not sure that is on this slide. Is it? No, it's not on this slide. But we have 4 classes of accounts. And there are, so the classification are 4. You have the four classes are the things that you will find in your trial balance, right? So it says that the trial balance is a snapshot of all the balances in your various ledger accounts. You put them together to form what? Your trial balance. So it's a summary drawn from all of the books put together. All items recorded on the debit side of the accounts must be equal to the total that is recorded on your credit side of the trial balance. What does that mean? Just like I said, a scale. This must be equal to this. What's on your right must be equal to what's on your left. So on your trial balance, you have assets and expenses on your debit side. On your credit side, you have your income and then your liabilities on your credit side as a standard rule. I repeat again, if you have a biro and paper, please write it down because it's important. This case study, you are going to answer it and you are going to send it. And you're going to send it back to me. Okay? As an assignment. So on the trial balance, on your debit side, you will always have assets and then you always have your expenses on your debit side of your trial balance. On your credit side, you will always have your income and your liabilities on your credit side. Please note, I'll take it again for the last time. On your debit side of the trial balance, you always have your assets and your expenses. On your credit side, you always have your income and your liabilities. Okay, so that moves on. So I'm going to explain. So this one, I'll tell you what to do on this case study, and I'll answer it for you orally now, and I'll expect you to still put it down on paper and then send to me. So here are a list of activities and transactions that Diego did for the month of July 2020. It's similar to what we have done earlier on. So, but what we need to do is just to extract a trial balance from this. So Diego set up a business with a capital of 500,000 naira on 1st of July. And then he bought goods on credit from Sandra, worth 154,000 naira. And from Patrick, worth 176,000 naira. He paid rent cash 160,000 on the 7th of July. On the 10th of July, he paid Sandra by check 127,000 naira. And then July 15th, he paid rent by check of 100, I think the balance of the rent by check for 120,000 naira. So you are required to prepare what? A trial balance as at the 31st of July, 2020. So I know that number one. So what you're going to do is all of the ledgers, just like we showed in the previous, in this sheet, in the principle of double entry, right? You're going to prepare ledgers like this. And at the end of the day, you prepare what they call a trial balance. So I will send a format of a trial balance to you, or just Google it. I don't need to send it to you. It's just like a schedule. On the first part of the schedule will have your items or description. No, sorry, the first part will have item or description. the second part will have debit, and the third part will have credit. So you have like a table where you have three, columns you call it now? So you have the description, you have the debit, and you have the credit. So whatever you have, whatever balances you have on each of these accounts is what will show up in your trial balance. So you know which account to debit and credit with your capital account when you bring in cash as capital. We've done that earlier on. They bought goods on credit from this and this. Also that one, we have done that one. Paid rent by cash. That one, I believe you can handle it. Paid Sandra by check, you should be able to handle it. Paid rent by check, you should be able to handle it. So all of these things, I believe that there are things that you should be able to do. So I'll give you that as an assignment to sort out and then send it through Joke. Okay, so very quickly move on to the basic accounting, that's business accounting proper, which is statement of financial position or your balance sheet. So what is a balance sheet? The balance sheet is like a list of all your balances. Imagine you make a list of everything that is important to you. Along with the list, you watch values of all of these items, and then you make a list of everything that you owe to others, everything that has value to you, and then you subtract the total value of the list from the total value of the first. So, you know, this is my first paragraph, is exactly what we put at the bottom of this, which is the accounting equation that we discussed earlier on. So what you have in your balance sheet will be a sum total of everything in your accounting equation, which means that your balance sheet should show your assets, it show your liabilities, and it will show your equity. What are your assets? Your assets are the things that you own. The things that are your own, those are your assets. In the case of the tailor, her machine is her own, is an asset. Her generator is her own, is her asset. Her table is her own, is her asset. Her iron is her own, is her asset. So those are the things that she owns, that she makes money from. Assets are valuable resources that you own, that either short or long term, but that you make money from. You use them to make money, simply put. Those are your assets. So certain things that you own, that you use to make money are your assets. Okay, so what is equity? Before I come to liabilities. Equity is the money that you have put inside the business, either that you own by yourself, right, or investment by others, or all the owners of the business, basically. So what are liabilities? Liabilities are simply money that you owe, not own. There's a difference between own and owe. Own is assets. Owe is basic. That's liability. Do you understand? What other people, let me put it this way, what other people borrowed you, so I don't confuse you, are liabilities. The things that do not belong to you or you are using, they are liabilities. So in your statement of financial position or your balance sheet, you have a list of all of the assets that you own, Abi, on one side of it, and then on the other side of it, you have a list of all of your liabilities and then equity. Is that clear? You have a list of all the things that you own, and you have a list of all of the things that you owe on the other side. So some people will say, because now we relate equity to liability, because you are not the business itself. You are the owner of the business, but because the two of you are two independent entities, it means that you are borrowing the business money by yourself. So that's why we have put that on the same side with liabilities. So at any given time in your balance sheet or your statement of financial position, your assets must be equal to your liabilities and your equity. Equity is what some people call capital. It's still the same. So don't get confused. So your equity or capital plus your liabilities will be equal to your asset in your balance sheet. The amount of money provided directly by the owner of the business or other investors is what you call your equity. Now, there also another part of your equity is what you call your retained profit or retained earnings. It means that if you have done business over a period of time and you have made certain profit and you have not spent all your profit, but you have left some inside the business, that part is what you call retained earnings. Which means that earnings that you have earned, but you have retained it for the future building of the business. You remember one of the 5 tips I gave you is for you to plan for major expenses. So part of the way you plan is by retaining certain amounts in your business that you plow back into the business to either buy big assets and all of that. So that's that about your balance sheet or your statement of financial position. Sorry. Okay, so your income statement. Income statement presents a summary of all the entity's revenue vis-a-vis their expense. So for my income statement, I have all the income I've made, all the sales I've made, I have it on one side. And then underneath it, I deduct all the expenses I've made at the bottom of it. And then I arrive at a particular amount that I call my net income. My net income can be positive or negative, right? When my revenue is more than my expense, my net income is positive. When my revenue is less than my expense, my net income is negative. I'll repeat that again. When my revenue or sales is more than my expense, my net income is always positive. And when my revenue is less than my expense, my net income is always negative. Income statement presents a summary of entities' revenues, which is what the company earns from sales of products and services. And then the expense is what we expended to earn this revenue, which means that your salaries are your expenses, the sales and marketing, your expenses, money for fuel, money for diesel, money for repairs and maintenance, money for internet, money for credit, you know, all of those things are expenses. All of those things, you add them together and then you remove them from your revenue. And then you get what you call your net income, which is either you call it a profit or a loss. So if your net income is positive, it's called what you call profit. If your net income is negative, it is called loss. Now, some of the mistakes we make in business is that we consider our revenue as our profit. Please, your revenue is not your profit. Until you remove all the expenses you have made, or the money you have spent from your revenue, that's when you get your profit. So it's important that you understand that your revenue is your sales, yes, but you need to deduct all of the expenses you have made to arrive at whether the business is profitable or not. So you need to also understand that. Okay, so sorry, I think there's something we didn't put here, which is your cash flow statement. Under budget and planning, there's what you call budget analysis. I think that will basically show what you have. Your cash flow statement is a little different, but it's similar to that in terms of format. So for your cash flow statements, you have, it shows the flow of your cash. It shows cash that comes in, you deduct cash that goes out, and then it leaves you with your current cash position. What do I mean? In the case of the example we gave above, all the money that came in, we have money from the owner of the business, 500K, that's cash inflow, right? Sales, money that came in from sales is part of it. Money that came in from whatever sources, maybe from investors, or even from those that are borrowing you money. Do you get? As long as it has to do with cash, anything that has to do with cash goes into your cash flow statement. That's why it's called cash flow statement. Now, for things that are bought on credit or sold on credit, they do not enter into your cash flow statement. So in that case, it's not included in your cash flow statement because it does not involve the movement of cash. So anything that involves movement of cash comes into your cash flow statement. So I will, for cash flow statement, it's divided into 3 basically. You have your investing activities, you have the financing activities, and what's the third one? Operating activities. So operating activities will involve operations and all of that, how you operate the business, with the things that involve your operation in the business. For example, your sales, for example, will be included in your operating activities because it's part of your operations. Purchases will be included there. It's part of that. And then what else? So investing activities, financing activities will involve those that are financing the business. For example, the 500K this person brought in will be under financing activities, right? If you are paying them dividends, it will be under financing activities. And then your investing activities are the monies you have invested in buying assets. For example, you bought a table, you bought iron, you bought all of that. So basically, that's what that's all about. So on this note, I don't know if Femi is already on standby. Is it 9 o'clock yet? So if you have any question or you need clarification on certain things or you need help with your business in any way, please don't hesitate to reach out to me. Ajoke will provide you with my email address and my telephone number. That telephone number is on WhatsApp, so you can chat me up at any point in time. I'll appreciate that. So very briefly, I think I'll just take about 3 questions before I allow Femi come in. Joke, are you there?
Yes, I'm here.
Okay, so do you want to moderate the questions? Just 3 questions, and then we'll wrap up for Femi to come in.
Okay, 3 questions. Any questions? If you have a question, just raise your hand. We have 3 questions already. The first, okay, 2 people have raised their hands. So let me. Who are they? Okay, James. Okay, James. We have James, we have Osaratin, and okay, James, you can unmute yourself. James, I've allowed you to unmute. You can unmute. James,
Okay,
can you hear me?
While we're waiting for James, I have a question here on the chat group. Somebody is saying that as a consultant, is my software a liability or an asset? And they're professional books. So as a consultant, your software is an asset to you, particularly if that is what you are selling, that's what you're trading with. Your software is an asset to you. Professional books also are assets to you because they are things that you use to make your money there. That's where you get your information from. So they are basically your assets. Okay, so James, are you there now? Are you ready for us now?
That was Osaratin's question. So I think we have taken Osaratin then. Okay. Then James, if Osaratin, right? That was a question, right?
Yes, but I had another one to add.
Okay, can we take somebody else?
Okay, yes, please go ahead.
Yes, thank you. James, if you are not ready, Otunayo, are you there? Otunayo, you can unmute. Okay, if James and Otunayo are not ready, I guess Osaratin can take her question, and then that will be it for Lakehead's session. I'll count to 5. Otunayo and James.
Okay, no, I think I'll just reach out to Adile in private because of time, so I don't delay the next speaker.
Okay, all right, thank you. So Osaratin, I guess you can go.
Okay, I was just going to ask, you talked about expenses. Is divulging your personal expenses from your business expenses? Because sometimes, like this COVID-19, you are working from home, you're running your personal generators, all for the business. How do you then differentiate them? Because you are using the generator at home at the same time using it for your business.
Okay, so that kind of situation will be determined by you. You know the ratio. You can determine a ratio. It doesn't have to be. It doesn't have to be exact like that in the sense of it. Because in this case, you can't really tell. Because generator, the same fuel you use, whether you put on your freezer or you put on your internet and your laptop, is the same you will have used. So you will just decide on a ratio that you can split that with. Say, okay, for the generator for fueling the gen, because normally during business hour, because if you're for example, if you're in the office between 8 and 5 p.m., 8 a.m. and 5 p.m., you normally will run your generator at the office, right? And then you will not be at home to run your generator anyways. So you can just say that the fuel you use between this period and this period, you can then, look at that as your office expense. And then afterwards, you can say that will be your personal expense. So you can figure out a way. It's not cast in stone. There's no particular way to do that. But basically just record something that you have used. And you might even decide that, okay, if I use 5,000 naira fuel, I will just say, okay, 2,000 out of it I record as business expense and the remaining as personal expense. It depends on how you want it. It's not cast in stone. That's why we have what you call accounting policies that we haven't spoken about here anyways. But there are policies that guide your recording and all of that.
Hello.
Hi, sir.
Yeah, this is Femi speaking.
Hello, sir. Nice to have you here, sir.
Sorry to interrupt. I just wanted to make a quick statement on the last question.
Okay, good, sir.
What usually happens is most in advanced economies, because they have huge tax compliance and tax regulations there, and they chase them for personal taxes, personal income taxes. What people usually do in other places that, when any expense you can ascribe to the business, you try as much to ascribe it to the business so that you can reduce your tax liability or tax burden eventually. So if you are using fuel and maybe you are working from home, or the gen service both your business and your home, usually everybody just take it as a business expense, because it's going to eventually reduce your accessible profit rather, and then your tax liability is, so in the UK or London, guys that work on that, they work on their own. Everything they can ascribe, even if it's sort of a personal expense, if they can ascribe it, they use the term when only reasonable exclusively. If they can say that this is actually for my business, you just pack it to the business. So if you are fueling generator, instead of you worrying about which one is house, which one is, just put it to your business and your tax is reduced. It's simple.
Okay, that's a good one. Okay, so on this note, I crave your indulgence to take a bow and allow Mr. Femi to take over. Ajoke,
yes,
are you there?
Yes, Lekki, I'm here.
Okay, so
okay.
I think I'm going to. Who's going to share the screen? I'm sure he has the slides.
Okay, Lekki, wait, hold on. Before you run away, before you go, we need to say a big thank you because I know you're leaving now. You have another meeting. So yes, this was even you had to reschedule your schedule so you could join us today. So we'd like to appreciate you our own way. So my love gang, my love squad, on this note, please let's unmute ourselves and say thank you.
Thank you. Thank you. Thank you.
Let's do anything we want to do.
Thank you.
Thank you. Thank you. Thank you.
Lekki.
Thank you, Lekki. Thank you for breaking down accounting. God bless you. Thank you.
Thank you so much. Thank you.
Thank you.
I love your teaching.
Thank you.
Yeah, I mean, I can say you broke accounting.
Thank you so much.
Good,
You make me to love accounting.
Thank you so much.
Thank you, Lekki. All right.
Thank you. Hope to see you guys soon. Or some other time.
I'll be sharing your phone number and your email.
Yes, please.
So they're going to arrest you today and during the week. So please get ready to be arrested.
No problem. No problem. I'm ready for y'all.
Okay. Thank you.
Right, thank you.
Thank you so much. We can release you now. We send you first.
Thank you.
Okay.
Right.
Yes. And the second speaker, we're still on accounting, and the second speaker was Mr. Femi Ogundele that just chipped in to add some pepper to the last question. So let me just briefly introduce him so that we can warmly welcome him as well before he takes the latter part of
3,000 naira, right?
So Femi Ogundele has almost 2 decades of service career. Okay, I'm going to be muting us all now. Okay. Femi has almost 2 decades for service career which commenced as an associate with PricewaterhouseCoopers before his foray into banking. He has stints at Platinum Bank and EcoBank prior to joining Standard Chartered Bank Nigeria in 2006, where in his 11.5-year spell saw him oversee the regulatory reporting function and deputized as the financial controller, supporting retail and corporate banking functions in the business partnering capacity. It's actually a long one. Let me just see how I can summarize. Okay, so right now, Femi recently consulted for the Financial Institutions Training Center (FICC) on its competency assessment system project, and he is a member of the training faculty. He's currently the Chief Financial Officer or secondman from KPMG of Grace Lake Partners, a fast-growing investment boutique firm, which includes Express Pharmacy, JG Cogs, Grace Lots, and Move as Uber's fleet partner for Sub-Saharan Africa. It's actually still a lot more. But on that note, guys, please, let's all unmute right now and warmly welcome Mr. Femi Ogundele to take the remaining part of this class. Welcome, Femi.
Welcome.
Welcome.
You don't use wet stand.
Welcome, sir.
Welcome, sir.
Welcome, sir.
Yes, I am here. I'm just trying to lap in the adulation. That's it.
Please feel free, enjoy. You have the mic, you have the field, you have the floor.
Okay, great. So how does this work? I'm not a Zoom person per se, so the presentation is
Okay, you cannot share your screen. You can just share your screen. Let's click on share screen.
Where is that?
At the bottom.
Okay,
the bottom taskbar. Let's click on share screen.
Okay, good.
No, all you money people. Money, not just money. That's it.
Not exactly. Okay. All right. Thanks a lot. It's great to be here, and also to
share your screen. That means you have to.
She's sharing now. You now have to put it in the presentation mode so that we can see it clearly. What's at the bottom of your screen?
Yeah.
And on your taskbar, you can see presentation mode.
Is that it?
Yeah. Well done.
All right, wonderful. Great.
Okay.
Okay. Thanks a lot. So this is interesting. So I'm going to go through this pretty quickly. I think we have about 35 minutes. And I think Leke has gone through really the important aspect or the basics of accounting. The next two modules actually kind of discuss items or discuss areas that fall out of accounting. So accounting has two major areas. We have the financial accounting and we have the management accounting. The financial accounting is what Leke has talked about, which is, the double entry principle, creating assets, creating liabilities, how to account for sales, how to account for purchases, how to do a trial balance, how to build up your profit and loss, how to build up your balance sheet. The second major aspect of accounting, which is the management accounting part, is an area that has to do with presenting financial information in a certain way. So that's where we have budgeting, and that's where we have financial statements analysis. Part of it is management accounting. That's where we have costing and all those kind of things. So there are two different major sides to accounting. There's the financial accounting, which is double entry. There's the management accounting, which is sort of reporting. And budgeting is part of that. Is a subset of management accounting. So we're going to go through budgeting for a bit, and then we'll go through ratio analysis, which is also a part of management accounting. Okay? Am I communicating? Yeah. So so basically, like Jesus said in Luke 14, that if you are designed to build a tower, do not first sit down to count the costs, whether you have enough to complete it. Otherwise, you lay the foundation and not be able to finish. And all who will see it will begin to mock, saying, this man began to build and was not able to finish. And this Bible quote is very apt, because sometimes we enter into projects, as I've seen, and you don't fully understand what it takes to get that project going on, especially in an economy like Nigeria, where things change so fast, regulations come in, and you get involved in something you don't know. I mean, I have a project that I got involved in, and because of it happened when the Naira was devaluated by almost 100%, just affected all my plans. Right? So these kind of things. So that's what budget is about. Budget is about making sure that you're able to plan ahead and take into consideration have assumptions that take into consideration any eventualities, so that even if your business is impacted, you are fully prepared for that eventuality. So that's what budgeting and planning is about. Okay? So basically, business owners, if you're starting a business, you need to be able to plan your limited resources, because in economic times, we have what we call, there is limited resources, and then we have what you call scale of preference, for you to be able to know what you should be investing in or what you should be spending money in. And so that is what budgeting is all about. So the key benefits is helps you to effectively manage your resources, helps you to allocate resources to projects, helps you to monitor performance, improves your decision making. Then you can plan for the future, and then you identify problems when they occur. And if you have a large business or you are starting a business model, when your staff or people working on that, you know what their targets are or what they are supposed to achieve, it enables them to channel their resources effectively and increase staff motivation. Okay. So a budget is defined as a plan in monetary terms for a defined period, showing income to be made, expense to be incurred, capital to be employed. And usually people budget for a full year, but you can budget for a quarter, you can budget for half a year, but usually it's a full year budget. So at the end of the year or at the end of your reporting period, you know exactly what you are measuring, what you have done against. Okay. So if, for example, you want to start a restaurant, I have a friend who just started a restaurant about 2 months ago, actually. Just when we were raising and he had to do a budget of what he needed to do. They got the rentals, and then they needed to kind of budget for all the things they needed inside. And because the wife was involved in catering before, they were able to kind of estimate how many people in that area were going to buy food from them on a daily basis, the average price per plate that we're going to buy for a period of a month. And on that basis of that budget, we're now able to say, okay, for this one, we need to get in store maybe a bag of rice, half a bag of beans, you need to have these 2 bags of yam. By the time you do that analysis, you'll be able to project ahead of how much because of course, what you have to do before, I mean, you have to get in your stock before you start selling, right? So that is one of the benefits of budget. Okay. Joker, I'm communicating, Abby?
Yes, you are. Yes, you are.
Okay, yeah, because it's all quiet, so I just want to be sure. I'm not talking.
No, because I've muted, because of the background noise, I've muted everybody's on mute now.
Okay, that's fine, no problem. Okay, so we have different types of budgeting. There are a little more, but these are the main 5 types of budgeting. So we have the incremental budgeting. The other budgeting is for business that already existed. So if you have done something previously let's say you have, at the end of 2019, you have, or maybe at the end of this year, you have a shop, you sell phones, for example, and you know you have sold 100, maybe 200 phones. This year, the average price of each phone you sell is 50,000. Okay, if you just multiply that, that is about 10 million, right? In phone sales. So what you are going to do in current year is basically just do an incremental. This is how much I'm going to make on phones. Just do an incremental on that. So last year you sold 400 phones at 50,000. This year, how many do you want to sell? What extra do you want to sell on top of that? You want to sell an extra 100 phones, maybe because inflation, the price goes up to 60,000. So simply your revenue budget will be what you made previously, 10 million plus what you're going to do this year, which is an extra 100 phones at 60,000, which is 6 million. So you know that your budget for this year in terms of revenue you are making is going to be 160,000. Simple as that. Then you now have to factor in the costs that you need to run your business. How much you pay for the rent for your shop, which may be 2 million. You don't expect that to change. How much you pay for quelling, maybe it's 1 million. What you do for other things, you put that in, and then you have for a year you might not have a figure of say 50 million as profit that you make. But what you do now when 2021 comes and goes, at the end of the 2021, you take your books and check what you have done. Did I actually sell? Did I actually sell 100 and did I actually sell 300 phones this year? Compare it to what you're budgeted for, and then you know where you came short of, right? So that is what incremental budgeting is about. Zero-based budget is a budget that has to do with zero base. As we are starting from the scratch, you're not considering whether it's applicable to new businesses, but if you're not a new business, you're not even thinking of what you did in previous year. You're just estimating that based on different factors, or what they call assumptions, budget assumptions. You're just estimating what you want to budget for, and you are saying you're going to measure yourself against this. Okay. I used to do this before, but I don't have that. Not that I don't have this, but I really don't. So before, when I was in banking, because bankers, you basically take a bit of loan, right? So I did take a few loans to buy my wife a car, to get one or two things. So before salary day, like before I got paid on 26th or thereabout, before then, a week before then, I have what I call my salary budget. So I have it up front. So I have it on a monthly basis. Every month I have this sheet and I list the things I know I'm going to spend. Maybe school fees period, I know that this month I need to provide for this school fee. So I have that my monthly budget I do. And of course, you'd have people who would have called you, hey, Egbon, this and that, all sorts. And the ones I'm happy to give, I also factor those in. I know before I get paid, I know what my budget is for the following month. I know what I'm supposed to spend. Usually, when I'm done, I usually go back. When the next month comes and there's a new salary, when I have to do the one for the new month, I actually go back to the previous one. And I see, where I also almost always exceed my budget, to be honest. So I see where the gap is. Okay, so might be that I didn't have plans to have a tire, a new tire, and then I had to buy a new tire. So that comes in there. So that's good. For me, it's just for me to be able to give myself some control to ensure that I'm not actually, wasting resources or spending money anyhow. So that helps me. Okay. So usually, this kind of budget is, because I do it every month, it's sort of zero-based budgeting. It's not based on what I've done in the previous month or whatever. I just look at, okay, this month this is going to happen. Let me provide for this. I need to do this. maybe there's you need to travel, I provide for that, and then I compare it to what actually happens in the following month. So that is how you do zero-based budgeting. And the third one is fixed budgeting. Fixed budgeting is you basically fix a budget for a period, and so you say this year I want to sell it. You're a phone dealer. I want to sell 1,000 phones, and that is it. 1,000 phones at the average cost of 50,000 naira. That is it. So 50 million is what I'm going to make in my sales for this year, and that nothing changes. At the end of the year, you check that I've sold 50,000, either more or less, and then you see where your budget variance is. Okay. The next one, which is a flexible budget, is you might not say that, okay, because of by the time you've done your budget, you might now say maybe towards the end of the year. For example, this year was a COVID-19 impacted year. You now say that budget was not realistic at all. Okay, because we were on lockdown for about 2 months. Market days were maybe 2 days during the week. There's no way I could have sold. I could have sold 500 phones, for example, this year. So I need to change that budget to be more realistic, or to actually show what happened in reality, and then that's what a flexible budget is. Okay, rolling budgets are sort of a flexible budget, but rolling budgets are budgets that you update every time. So every month, maybe you have January, you have done a budgeting before. In this is what you're going to do. By the time you go to February, you are going to roll it over. You're going to take off whatever has happened in January. I'm going to start again in February with a new budget, roll it over again, maybe on a year-on-year basis, February to next year, January, March to next year, February, and that's what rolling budgets are, but not really a standard budgeting approach. Okay? So these are just styles of budgeting. This is more from a business perspective, a business point of view. Okay. For business owners or for large corporations, different type of budgets that they have. One is imposed, is that this is not really for SMEs or sole proprietors. This is really for business owners. So business owner, if you have a large business, for example, your business employs 50 or 100 people, the imposed style of budgeting is that you just tell them that this is what you need to go and get, this is what you need to sell, or whatever you need to do. Maybe you are a realtor, you sell land, you need to go and sell this land, and that is that. Simple, imposed style of budgeting. Then you guys tell you, for this period, this is what you need to do, and then this is what your compensation is based on. That's what an imposed style is. The prescriptive style is where you actually tell the people that are working with you that, hey, what are you going to do? Bring it to me, let us bring it to me, and then this is what the basis we are going to measure your performance, right? So that's what the prescriptive style of budgeting is. Not really the business people. You try to downplay what they can actually achieve. So this is not really a desired style of budgeting. And then the second one, which is an hybrid of the two, is the negotiated style of budgeting, which is, you ask people to bring what they are kind of going to achieve, and then you have a discussion with them. So this is what you want them to do. You marry the two and you come out with you meet at a medium, or you meet at the center and agree that this is the budgeting approach you want to go to. So this is long and short of budgeting. This is just the technical, this is just the theoretical aspect. Another part of the course, we have the technical where we now build up budgets and do what we call variance analysis. But this is really what the theoretical aspect of budgeting is. So budgeting is basically estimating what you want to do in future, planning for what you want to do in future, usually for a year, bringing all the assumptions in there, and then when at the end of that period you have to do what you call a budget variance analysis, checking that what you actually did is in line with budget, and then finding out reasons for why either you met the budget or you did not meet the budget. That is what budgeting is all about. Okay. Can I get an amen if you got that? Hello?
Hi, Femi.
Yes.
You're still here.
Okay, great. So
do you need them to unmute?
Sorry?
Do you want me to unmute them?
Yes, for a minute you can.
Okay. Okay. Okay.
Amen.
Amen.
Okay, okay, so does anybody have any particular question, or you can just raise your hand? Does anybody have anything to ask particularly, right? Because this is what we're just doing here is really the theoretical side of budgeting. Does anybody have any particular question at all?
Yeah, I have a question.
Yes, please.
I want to, you talked about this kind of budget is basic, yes, but in reality, where you're not sure where your source of money will come from, you are prospecting for business, okay? Yes. It's not like you have you know where all the sources have come from, your business is new. So you have proposals that you have sent out, you don't even know whether they will come through. So how then do you make a budget, you know, because you've sent a proposal, some will come, some will not come through. How then do you then plan for your income or even how you're going to spend the money? Thank you.
So I agree. So that is, well, that is a concern, but, you know, as most business owners and as you know, Christians, you know, you need to have faith. So you need to be optimistic. You need to be sure that, that what you have put out there, that something's going to come out of it. Okay, so I think I want to show something here, which is, I don't know if I can show this now. Okay, you can see my screen, right?
Yes.
Okay, so this is an Excel file.
But we can't enlarge it.
Enlarge how? Okay, can you see this?
I can see the Excel file.
What we can see is size of budgeting. We can see is the PowerPoint.
Just hang on. Let me see.
You can just minimize this. You can minimize the PowerPoint, so you can now maximize the Excel. Okay.
Okay, I should minimize the PowerPoint and maximize the Excel.
Yes, okay. Minimize the PowerPoint. They say I'll maximize the Excel.
Okay, good.
And then click share screen.
Can you see it now? Or do I have to share screen again?
You have to share screen.
Share screen again.
Okay. Don't use Zoom. Don't use Zoom in my office. Use Microsoft Teams. Okay, good. Okay. Okay. So, I mean, this is a business model that we did sometime in the month of April, May. And, you know, so, you know what a budget is just really putting faith out there, saying that you hope that this is going to happen. But the thing about budgeting is that you must have what you call, you must have assumptions that drive everything. So this is the business really, which we just got into, and we had something to do with Uber and the likes and stuff like that. And we needed to do a budget. Okay, business was supposed to start off in June, and we needed to do a budget. It doesn't matter that this is September, we have not met half of this budget, but you know, we had to put it out there because people will not give us money if we didn't have an estimation of what we are supposed to do. Okay, so that's the idea of what a budgeting is. We needed to estimate that we're going to make certain monies, we're going to get certain stuff from insurance, do some certain advertising, get some balloon payments, but we got nothing, absolutely nothing in the month of June. We started getting some things in July, but we are still going to measure ourselves against this budget that we brought up. So that's the idea of a budget. So if you have proposals, let's say you have 10 proposals out, you are a new business, you have 10 proposals out. What is the probability of all your proposals being accepted? Okay, you can decide to be bullish and say you're going to put in all your proposals as you have all your details of proposal. You're going to be either going to be bullish and say I'm going to put 100% of my proposals as being successful, but that might be stretching the budget too far. So you need to kind of, if it's a new business, also look at historical events. The people that have done this before, what is the likelihood of them getting onboarded by whoever they are pitching with? So you might just say, okay, these proposals, I'm going to assume, I'm going to budget that 50% of them are going to come through, and that will form the basis of your budgeting. Okay, and then you are going to now put in your other factors that affect that the cost of you driving that business, and then you get what your budgeted revenue is, right? So there has to be assumptions, budget assumptions. So one of the budget assumptions is this. One assumption is the proposals that are built out by assumption of what they call materialization. Okay, so you might say 50%. Then if your proposals are supposed to earn 20 million in businesses, instead of you saying 20 million revenue, you just put 100 million. That is what budgeting is about. Also, because you understand what is going on, and another thing is to look at what the government budgets are going to be. So if, for example, you're in agriculture and you see that the government is following a policy of local production right now, of banning imports right now. I think they banned, I don't know what they banned, the flour or cassava, I can't remember what they just banned, and they lifted for one or two entities. And if you're in that part of business, you need to be able to factor up what you call external events into your budgeting process. You need to be able to say that, okay, because the government has banned this thing from being imported, and I'm in this part of the business, then I can be realistic to say that everything that maybe 90% of what I want to achieve in this business is going to be achievable. Then I can now put that in my budgeting model, right? So you need to have faith, you need to believe, but at the same time, you also have to look at externalities that will affect your business or your assumptions for you to be able to do an appropriate budgeting. So you have proposals out, you don't know which one is going to be accepted. You need to be able to say, you need to be able to write an assumption that I'm going to assume 50% of these guys are going to come back to me. Possibly, that will form the basis of a budget. If it's 100%, all well and good, you have exceeded your budget. If it's 30%, you need to now say, okay, I didn't meet my budget. What could I do for the next phase that will be able to help me meet up this budget, meet on my budget projection, right? So is that clear?
Yes, please. Thank you so very much. Very useful. Thank you.
Okay, great. So if there's nothing else on budget, I'm going to.
Sorry, I have a question.
Yes, please. Yes.
From experience, what style of budgeting do you consider appropriate? That's
okay. So I think for businesses that have been there, what you have to do, the style and what have been used to is what they call incremental budgeting. Basically, looking at what you have done in previous year. Sorry.
No, that was interruption from someone. I've muted her.
Okay, no problem.
Yeah.
So basically, for business, if you have been in business for a while, or the best style of approach is incremental style of budgeting. Because what happens is, anyway, like as human beings, we are looking at developing, growing every year, going from where we are year on year. Okay, look at the business of selling cars, and you sold 10 cars in 2019. You sold each car at a total cost of selling price of 4 million, and maybe the cost of you bringing the cars into the country was 3.5 million. The simple thing to do was the following year use that same basis as your budgeting basis. So you need to grow. You sold 10 cars. This year, I want to sell 20 cars. Okay. There are so many young guys getting out of the university. We are hoping the economy improves. We are out of COVID-19. People will now start getting cars. People are getting married. People, marriages were stalled during, there are married, people still married anyway, but, marriages are not like it was in 2020, but so people are going to rush to get married now that there is, that the lockdown is eased. People are going to buy cars. So I'm going to assume I'm going to sell at least 10 more cars next year. So last year was 10, now it's going to be 20. And then the cost of me buying, selling the cars was 5 million last year. I can assume it's going to be 5.2 this year. That means that I'm going to make 120 million, that's 110 million as cars. And if because of me bringing the cars in is 3 million, then it's going to be, for 20 cars will be 60 million. So I know my budget revenue, my budget cost, exact cost for the car is going to be 50 million up before I even consider any expense. So that's how you start. And then every month you start reviewing how much of this you have made. You start, tracking yourself, tracking performance. Okay, how much of this? What do I need to do more? Do I need to now do an advert? Do I need to get some influencer on Twitter to put my stuff out there? Those kind of things. That is what the budgeting is supposed to do. For you to, it's supposed to actually guide you in terms of deciding what you need to do to achieve that budget. So if in 2021, by June, God forbid, or whatever, you have just sold 5 cars and you needed to sell 20, you said something is wrong, I need to do something here, okay? I need to plow back some of my money into doing something to bring in the cars in. So maybe I need to put my word out there, okay? Maybe I need to go on Twitter, I need to start posting on Instagram, maybe I need to do paid promotions on these platforms, on social media, for me to be able to have people see my product and then buy it. And then, so that's really the idea of budgeting, for you to be able to see where you're falling short and what you need to do, the investment you need to make to be able to do that. So to answer your question, the best part of budgeting is incremental, looking for what you did previously, and then adding on top of that to help you get a budget figure. Okay? Is that clear?
Thank you.
Great. Good.
Yes, thank you very much.
All right, good. Any other questions on budgeting? Before I run quickly to interpretation of financial statements.
Yes, okay. I guess we can move on.
Okay, we can move on. All right, so let me
just minimize this. Simisola, you have a question?
No.
Okay.
So just Aileen, I think. Thank you. Okay. All right. So let me go back to the presentation for the. Can you see my screen now?
No, it's still the Excel. Your Excel should be at seen. So let's minimize the Excel again, and then can maximize the PowerPoint, and then share.
I'm not a Zoom.
Don't worry, all of us became Zoom.
Okay.
My first verifier.
So you guys can you can see this now, right?
Yeah, we can.
Okay. So this is interpretation of published financial statement. So I mean, for people who are not accounting people like us, even for us accountants, it took me time. I mean, I had my degree. I didn't finish. I just managed to. I just got my degree to pass. Some of these things I don't understand. I started working, to be honest. So sometimes it's a bit complicated, if you are not in that space, before, for you to just pick up statements and understand it. But when you have a financial statement, you need to look out for certain things for you to be able to understand where this business is doing or where this business is going. Okay. So, and I'm going to just piggyback on what Leke taught. All right. So, and I need maybe one or two people to give me their own views on this. Let's assume you start a business, a transport business. You have a bus, you bought a bus with your own personal money. The bus costs ₦1 million with your own personal money. And you use that bus to transport people from Lagos to Ibadan. Every day. You go once and come back. You have a driver that does that for you, takes people to Ibadan, comes back. Average cost of getting to Ibadan now, about 1,000, I don't know. I think it's Ibadan 2 years, but I'm just assuming it's 1,000 and 1,000 per day. Your bus carries 15 people. So if you go to Ibadan once, you spend 15,000, you come back from Ibadan. So you make 30,000 on a daily basis, cash, okay? And this is the business you do, okay? How is this represented on the financial statements? And how does this affect, the way you interpret your business performance? So the cost of the bus is 1 million naira. You are the one that gave your own personal money to buy this bus. You didn't borrow anything from anybody, you just your own personal money. Can somebody tell me how this simple transaction of buying the bus, how you are going to represent it on a financial statement? Can anybody give me an idea or tell me how that's going to be? Anybody in the room? Just anybody?
Can I try?
Yes, you can try.
Okay, I think the bus, purchase of the bus would be equity. Then the, what's it called? Sales. The daily money made should be translated as sales.
Okay,
I think.
Yeah, good. Okay, so I want you to think of. You made a very good point, actually, but I want you to think of this, the buying the bus in double entry terms. So there's an equity portion which you got correctly, but there's another portion that you missed out. So you must think of every transaction in twos. They shall be sent out in twos. They are all twos, right? Every transaction is in twos. So the bus itself, buying that bus with your own money, there is the equity portion, 1 million equity, and then the second part is what?
Cash.
It's not cash, my guy. Can anybody give me another?
Asset.
Yeah, it's an asset.
The second part is an asset.
Correct. The second part is an asset, correct. So in your assuming that's the only thing you have done so far, in your balance sheet, you have an asset of a bus, 1 million. Then you have equity of 1 million because it was your money. It's like your own equity, right? Anthony, yeah, that's your point. Which is very correct. So you have an asset and an equity. So your balance sheet is balanced, okay? You get my point now?
Yes, I do.
Yeah, you get the point now. So you have the equity on top, and you have the equity below, and you have your asset on top. That's the first start. Okay, and then you start doing your business. You start recognizing your money. When you start making money, if you take people to Ibadan one day, and you spend 15,000. That 15,000, and you made 15,000. That 15,000 is going to also have two legs to it. Can somebody help me with the 2 legs it's going to have to it? Can somebody guess? So you took 15 people at 1,000 to battle, and you have two. There will be 2 sides to that 15,000 you collected from people. Can somebody tell me the 2 sides to that 15,000?
You debit your cash and credit your income.
Correct. This guy is a chartered accountant too. Abi? Are you a chartered accountant? Because that was really fast.
No, I'm a banker.
Okay. Well, you must have something in accounting there. I knew it. Yeah, so you have your cash and you have your income. So your balance sheet is growing, right? Because what you had before, initially, you had just 1 million of assets for the car, then you have another 1 million of your equity. What you now have is 1,015,000 naira on your assets, because your cash has been added to that, and then you are making income of 15,000. Do you understand the logic now? So your balance sheet is growing gradually. As you continue increasing business, if you go tomorrow again another 15,000, so your bank will grow by 30,000. Your revenue will grow. You get to another 30,000. So that's how it works. That's how it works, right? If you spend, of course, you have to now spend fueling. If you now buy fuel because you fuel to take the car, the vehicle there, your cash will reduce by 5,000, and then you have what you call an expense. Okay, the expense sort of reduces your revenue by 5,000. So that is actually the idea of building up financial statements. So what we're talking about here is how do we interpret those financial statements? So if you've done this for 6 months, how do you look at your financial statement and say that, okay, I've actually done well, okay, or I've not done well, okay? So if, for example, in 3 months' time, something happens and the driver did some funny things and you had to buy a new engine, the engine costs 500,000. Effectively, you are reducing the value of your assets, the 1 million asset to 500,000. This thing is reported somewhere in your books. Okay. Because of that, you have to do another double entry, which is you are buying a new engine, you are creating a new asset, but you are taking out of the money you have made from bank or from cash. You are reducing your cash holding because you have to fork out 500,000 to buy a new engine. That kind of affects your financial statements, okay? So for somebody looking at it on face value, the person might not know. So if, for example, you want somebody, your relative or your uncle or somebody to now invest in business, I want to buy 5 more vehicles to increase the trips I make to Badon to get more money because it's profitable. Your uncle might just say, let me see your financial statements. And if you look at your financial statements, you need to bring out some things from that financial statement that say that this business is not going well. That's what interpretation of financial statements is about. And just looking at the face of the financial, I say that this is not going well. I'm not sure I want to give you this money. Or this business looks profitable. I'm going to give you this money. So that's what interpretation of financial statement is. Okay. So standard financial statement that you see online, that you see everywhere, as major elements. We have the chairman statement, standard chairman statement, director's report, auditor's report, financial statement, cash flow. Financial, which has 3 elements, which is the balance sheet, profit and loss, cash flow, then the notes to the accounts. Okay, this is a requirement for every entity that publishes accounts. If you are a public entity, you are on the stock exchange, or you are a limited liability company, and that you are required to publish your financial statement, you must have all this in there. For small business owners, for whoever who are not required to statutorily audit, or you don't need to do all this, but by the time a business is growing and it gets certain levels, all this should be there. Chairman must report. There must be director's report. There must be auditor's report. There must be audited by an auditor. So checking that this financial statement makes sense, and then there's this other element. So I'm just going to share with you my screen and show you a sample financial statement that I have here. Okay. Okay, so if you can look at my screen, this is a comprehensive financial for PZ Industries. We had an interaction with a while ago. Okay, so it has there's a lot of story. Okay, but it has all those elements that I mentioned earlier. The chairman statements. You guys can see my screen, Abi. Can I get an amen if you can see my screen?
Yes,
Great.
you can see your screen.
Good. So
yes, we can.
Great. So, like I mentioned, like these are the elements here. So the chairman of the company will make a statement first and say, distinguished shareholders, ladies and gentlemen, this is what I welcome you to this annual general meeting. Companies are supposed to have an AGM once a year. Okay. After the end of the financial year, you should have an AGM. Basically, you should tell the people that, this is what you have done. And a number of us have gone for AGMs. And of course, maybe when you're a young guy, your dad tells you to go for an AGM. You wonder what is going to do. This is what they go and do there. Basically, listen to a chairman talk. You saying that this is what we did this year as a company. This is what we made. We made 100 million. Bottom line. We invested in this. We opened 2 new shops, 2 new factories. We bought in a new product. And because of this, we're paying a dividend of 1 naira per share. That is the chairman's statement, right? That is clear. That is what the chairman's statement is, okay? And then the chairman now says, we thank you, blah, blah, blah. We look to the future. What we intend to do is we want to enter partnership with 1 or 2 people, this and that. And that's what the chairman says. That's the chairman's statement. After the chairman talks his own, pardon my grammar, the MD or a director will also say his own, right? That's what we call a director statement. Okay. And usually this is done might be by the company secretary or whatever. So there's a director's report, right? So the chairman's statement, usually is read by the chairman or by the company secretary at the AGM. It's part of the report that they present, but it's read at the AGM. Then we have the director's report, which is in the financial statement itself. The director's report talks to you about some of the things the chairman has said, plus additional information. So it tells about the results, what we have achieved this year. The dividend that the chairman has already talked about. I'm going to tell you again what the company is doing. Then it's going to tell you the people that are in the board of directors. So this year, the directors that we have the chief, this is our chairman, we have this as the MD, this. We also appointed 2 new directors whose names are this and that. Okay. All the directors, we had 4 meetings during the year on this date, so. These were the people present. The number of directors that the president of every meeting as required by law is at least 4 directors, this and that, blah, 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 blah. This is the shareholding of the directors, and that's what is a director's statement is. When he talks about other things, that these are the committees that we have within the directors. We have an audit committee, we have a governance committee, we have a people committee. The committees met during this period. They had a number of meetings. These are people that attended, blah, blah, blah. And then they have what we call a statement of responsibility. The directors are supposed to do this, are supposed to do that, and it is signed by the company secretary. Okay? So that is the director's report. Am I clear?
Femi.
Yes.
I sent you a private chat a private message in the chat. Can you just look at it?
Okay, let me have a look.
Just look at the chat. I sent you a private message.
Okay, good.
Yes. That's before you go on.
Okay, thank you.
Yeah, that should be at the bottom. Have you seen it?
Just 1 second, please. You sent it to me on this model.
No, you just go on the chat. Just go on the chat icon. Then you'll see it sent to you privately.
Can you send it to me on? And our group chats, right? Just 1 second. I'm seeing group chats.
Okay, I will send it to you. Are you on your just to let you know the time? Just to let you know the time, because that will miss waiting.
Send to me WhatsApp, please. Thank you.
Okay.
Okay. Great. So so this is that. Okay. So that is that, right? So we'll move on, and then we have what the financial statement is. So the financial statement itself is where the numbers are, where you recognize your profit for the year. So I'm assuming, let's assume the guy doing the bus business has only gone to Ibadan 10 times during the year. Okay? And let's assume he started December and he wanted to just give a report of what he's done. So we are going to have a balance sheet, right? We're going to have a balance sheet, Abi. We are going to have a motor vehicle in the balance sheet of 1 million. And you have equity of 1 million, right? Asset is 1 million, equity is that clear? Hello? Okay. All right, so thanks a lot. I've seen your message now. So I need to round this up in 10 minutes. Guys, so if you don't, I'm going to run through the presentation. I have to go back to the presentation and leave this screen, and I will let you. Just one.
No, actually, I sent this message like 5 minutes ago. So you now have like 5 minutes.
Oh, so
allow me waiting.
Okay. All right. So, okay, guys, I'm going to rush through this very quickly. So we understand what the financial statement is, right? I'm just going to now run through what you need to do in terms of trying to check financial statements, right? So basically, what you need to do is, what is horizontal analysis? Horizontal analysis is just looking at what you have done. So if somebody has in business for 4 years, if somebody has in business for 4 or 5 years, and he sold in year one, he's selling phones, he sold phones totally worth 5 million in year one. In year two, he sold phones 10 million. He sold phones worth 30 million in year three. And if there's another person who's in the business for maybe 5 years, year one, he sold phones worth 10 million. Year two, he sold phones worth 10 million. Year three, he sold phones worth 11 million. Which of these two guys do you think is doing good business? Which of them? Somebody can just quickly answer me that. Which of them? The first guy and the second guy. So the first guy sold in year one, sold 5 million, year two went to 10 million, year three went to 15. The second guy sold 10 million year one, 10 million year two, year three went to 12. Which guy is doing
the first guy.
The first guy.
Yeah. So that is simply horizontal analysis. The first guy is the one doing business because the guy is growing by 50% year on year. This second guy, he might have sold more phones when they started out, but the guy is not growing. That is the first step in financial analysis horizontally. All right. So when you look at the business, just look at how their revenue grew year on year. Then you know whether the business is doing well or not, or where their profits go year on year. That's the first step. Then the other ones are now what you call vertical analysis, which is looking at items of the business. And I'm just going to look at 2 items here now. One is fixed assets over total assets. If your fixed asset is more, if your ratio of fixed assets is too much, it might not be a profitable business in quotes. Let me say, for example, you are selling clothes. Okay? You are selling clothes, and maybe you have your stock of clothes is, the clothes that you have in your store is 20 million. But you also have motor vehicles that you are using for the business. And your motor vehicles is maybe you buy a Jeep. You buy a Jeep, and the cost of, maybe you have 2 Jeeps actually. Let's assume just I'm a big boy. You have 2 Jeeps. And the cost of the Jeeps together is 60 million. So your total assets is what? 80 million, right? Are you with me? The fixed asset is a Jeep. Jeep is treated as a fixed asset, right? The clothes is treated as inventory. 60 over 80, which is the value of 6 over 8, that's 2/3. 2/3 of your asset is actually in Jeeps. Compare that guy to a regular guy that has clothes of, let's say he also has 80 million. He has clothes of 60 million, but he has a vehicle of 20 million. His own ratio is, let's say 40 million. His own ratio is 4 over 8 or half. Which of these guys, looking at it, is a more structured, focused business? Can someone just give me that?
The second
guy.
The second guy, because the second guy has invested his money in actually things that's going to bring money to him. But the first guy has invested money in things that it's just going to look fine, look good. So those are the kind of things you looked at. If your fixed asset is way more than your peers, it means that you are investing in the wrong thing. All right. Working capital, which is second guy, is actually the one where you have inventory or things that you actually turn over. So those are the things you're talking about. Okay. Then we have liabilities against total assets, right? So that's another one in balance sheet. So let's assume the guy that's going to Ibadan now. The car is 1 million, which is an asset, but the man is actually owing for that car. He didn't buy the car cash. He bought the car on which is not a bad thing, but he bought the car over a year ago and he's owing 800,000 on the car. Compared to this to a person who actually borrowed money but has actually paid back and owes 200,000 on the car. So he has liability. He's owing people. That's liability. So the person that is owing less, 200,000 over a million, 800 over a million, is clear that the guy that's owing less is more profitable. I hope that is clear, right? Can somebody say an amen?
Amen.
Amen.
Great. So that's how you analyze balance sheets, right? There are other balance sheet analyses that are more complicated, which is where we have margin analysis, where you're looking at gross margin, tax margin, efficiency ratio, return on assets. Those are more complicated, which we'll discuss in detail. I think there's another course that takes in detail, but that is it. And if you can go through your presentation, again, you can actually go through it, and then if you have any questions, Dr. will give.
Have you watched the pot? All the pots.
So if you have another question, Joker will give you my details so you can get back to him. But I think I need to run now. Okay, I apologize. I need to run. Are we okay?
Okay, yeah. I guess you can take one question. If anybody has a question, and let's quickly ask Femi before he runs. They all have meetings this morning. We have to beg them to just spare us their 2 hours. So if anybody has a question,
just a summary of everything.
You want a summary, Abby?
Yes, sir.
Okay, great. So summary, first and foremost, please ensure if you're a business owner, ensure that you have budgets in place. It's very important for you to track, because without budgeting, you're not able to. What is not what's the word they use now? What is not measured is not achieved. What is not measured? I can't remember that statement, but you need to be able to measure what you're doing. So have a budget in place. Small business owners, you can start with monthly budgets. Whatever you're doing, okay, this month I'm going to do this. At the end of the month, compare what you've actually done to what you budgeted for. Simple, put it in an Excel sheet. There are budget templates in Excel. But just go to start a blank Excel. You're going to say budget template in Excel. Do it, and then end of the month, when you are done, you see where money came in, where money went out. Simple as that. On the basis of that, you can be able to make decisions in terms of what you need to do next to move your business forward. Ratios analysis is when you're comparing businesses or when you want to see what you are doing well. The first thing to note is that you have more liquid assets than fixed assets, right? So if you are doing a business, ensure you are investing more in what are going to generate money. If you don't need to go and buy a property, right? You can rent a property first, and because you are paying renters, you are not investing all the cash you need in getting a big house or whatever. So that reduces your ratio, your fixed asset ratio. Make sure your fixed asset ratio is lower when you're starting a business. Make sure the ratios that the more important ratios are your current ratios, the ratios that have to do with what you actually turn over into cash in your business. That's the most important thing when you're starting off. When you have made enough money, you can now start investing in more permanent assets. You can now start buying big cars, getting buildings. But at the start of a business, what the relevant thing when you look at your business or when you're trying to invest in another business, check that they have more current assets than current liabilities, which is really inventory, stock, whatever, those kind of things. So those are the basis for you getting your business off the ground. Okay. I think that's it. Is that fine?
That's great, sir.
All right, great. Thanks a lot. Thanks for your time.
Sorry for
thank you, sir.
And before you go, okay, my EMP Love Squad Gang 2020, can we show Femi some love for all?
Thank you, sir.
Thank you, sir.
Thank you so much, Femi. Thank you.
Wonderful.
Thank you, Femi.
Thank you.
Thank you.
Thank you very
I
much.
felt the love. I felt the love from here, so I appreciate it.
Yes, so we are full of love, eh?
Yes, I know it's too much.
So the love is real here. If you're
please, you can share my details afterwards, and then you can reach me via WhatsApp if you have some clarification or whatever.
Yeah. I will definitely share your number, your details. So like I told Leke, you are under arrest for this week. So as soon as we keep getting in touch, just be responding to them. We have arrested you for them.
No problem.
So,
thanks a lot.
So thank you, Femi. Thank you so much. I mean, you've made everything. You guys have made everything. Accounting, money, budgeting look so simple. In fact, not just for business, even personal, home, in every area. Thank you so much. I'm sure from today now, our money, our pocket, our bag, our account, it's going to look so different with everything you taught us today. Thank you so much, Femi. Thank you so much.
Amen. Thank you so much. God bless you. Thank you so much.
Thank you. So we release it now with the love of God. Thank you.
Thank you, Mr. Femi.
Okay,
we love you with the love of God.
Yes,
appreciate it. Thank you so much.
Okay. And now, that was the full one. Are you guys ready for the final session for today? For the next one, it is going to be all about business planning. Okay. Can we mute ourselves? iPhone. Let's say somebody who doesn't have her name or his name on as the user ID. Please change all your names, though. Change your names to your names. First name, surname.
Change your name, change your name.
Not that I will not hear stories at all, your name to first name, last name.
My own is showing governance officer.
That is my name. Covenant and capital. Okay.
She's not a student, she is a supervisor.
Yes, so supervisor.
Okay, now let's go on. The next speaker session is waiting already. I'll just
next class.
Profile. Now, for the first time, it's going to be our first female facilitator since we started. So you gotta be ready. Let's raise up the roof for her. Very hot somebody like that. Okay. So the next speaker is Olawumi Olatunji. Olawumi Olatunji is a project finance and business development expert with over 13 years professional experience covering banking and finance, oil and gas, asset management. She is the founder at the Business Outliers and Enterprise Development Center based in Lagos, Nigeria. Olawumi has been a two-time bootcamp coach at the African Entrepreneurship Awards by the BMCE Bank of Africa in Morocco, and she has served with other organizations such as the Tony Elumelu Foundation and the Hult Prize. She has worked with hundreds of startup companies from various African countries to win millions and millions of dollars. I always like that about her CV. Millions and millions of dollars in grants and competitions. Olawumi is currently the Vice President at Business Nurture Financial Services Limited. And on that note, guys, let us raise the roof for Olatunji.
You're welcome.
Thank you. Good morning.
Welcome. Love.
Thank you, Joke. Thank you very much, Joke, for the introduction. Thank you, everybody. It's my pleasure to be here. As always, it's always an excellent pleasure talking and teaching at CCBS since the very first time we started. It's always been exciting. Yeah. So without further ado, I'll just go straight to sharing my screen so that I can begin the presentation. All right. Yeah.
I don't
my
think
screen is coming up. So can you hear me? My video. You like to see my video? Okie dokie. I'll do that. Okay, so this is my video. All right, so that's my video.
That is your face.
Yeah, this is my real face. Okay, can you see my presentation, my screen? I'm sharing the screen.
Yes, we can.
Oh, absolutely nice. Okay, so I won't go through my profile again because Joke has done a good justice to that. So to start, I want us to, can you see this screen showing Noah's Ark?
Yes.
Yes.
Okay, so we want to have a session that's, now imagine, I'm taking you down imagination lane, and you're going to imagine that you were all on Noah's Ark. You're on Noah's Ark on that, that period of the rain for that extensive period. How long did it rain for? How many days did it rain 40. For? How many nights did it rain? So it rained for 40 days. So you were on the ark. So after the rain stopped, right, you had to leave the ark. Now, so I want answers for this particular session in the chat box. So, and I'm going to pop up the chat box so I can see your answers now. I want answers. So you're on the ark. Now you want to leave the ark and you have to take, so you know to remember what exactly was present on the ark. So as business owners, as individuals, as experts, you are only allowed to take 5 things from the ark to go and start your life on the land. So I want people to start answering and telling me what you would take from the ark and why. You are going to leave the ark after spending 40 days on the ark. You've been stranded there. You need to leave this ark now and start your life on the land. There's nothing else on the land, don't forget. You are going to start your life on the land and you have to take only 5 things, whatever 5 things you want. Tell me the 5 things you want to take. And we have just 3 minutes to do this. And there's going to be a prize for the first people, the people that give the most fabulous answers. There has to be why. Yes, you are taking yourself. Well, of course, you are taking yourself, but 5 things you are taking and why. And why. It starts counting now. The time counts down now. So we have, bits and pieces of this kind of exercises that we are doing just to spark up our imagination, our creativity, because we need to start thinking with our feet running. We need to land with the feet running. So tell me, what are you taking? No, you are going to imagine the contents of the ark. It's an ark now. Imagine you are there with Noah. So what are the contents of the Noah? From the stories we know, what are the contents of the ark? That is your imagination running. So someone says she's taking seed and maize. So you tell me what you are taking and why. Male and female sheep. Okay. Someone says a person to help him plant. Perfect. I like that. I like that. Someone said they take him as a business owner. Male and female sheep. Fruits, goats, cows, fowl, hen, horse. Why are you taking all these things? Someone said seed, someone to help him plant. So it's obvious that he wants to plant the seed. Perfect. Simisola just wants to take herself. She cannot shout. Okay, goats, pigeons for breeding purposes, for propagation, goats and sales to start up the business. Sheep, seed. Okay. So many things. Cow, as it gives so many things. Dolapo Balogu, I love your answer. And I'm going to come back to that. Chicken and poultry. Food, water for survival, clothes for covering, seeds to plant. We're already starting life. We have everything we need to start our life afresh. Perfect. Cow meat. Okay, so good. So that was just a session to spur up our thinking. You are stuck somewhere. You, as a business owner, you are at the beginning of something. You have very little. A lot of us will focus on the things that we see to help us. But what is very important is, assuming you have nothing to start, and you're supposed to start an events planning business. How would you plant events in this Noah's Ark, or to start a school? You need to start looking, and there was a post on the Covenant Capital group just yesterday about tactics and strategy, where you focus on the things that you see. Okay, what will I do with this chicken? What will I do with this egg? What will I do with this seed? But many times it's also good for us to think of starting from scratch. Like, I have nothing. How can I build? What can I do? What can I do to pick and people pay? So, for instance, the children will come out of this ark and they don't have schools. Can I set up a school for them? Even if I was not even, people rushed all the goats and cows and the milk and everything. I was not able to access it, right? You know, so that's one thing. So there's another exercise that we're going to do, but I want to take it in bits. So I'll come back to this Noah's Ark exercise. So let's go straight into the meat of the business. Now, I have a slide here that talks about content. So elements of a business plan, why do we need a business plan, marketing and sales plan, financial plan, and then there's a business plan challenge. But I want to distort the whole idea, the whole template. I'm not going to follow this plan. I'm going to do something totally different, right? But let me just go to this slide. And there's a particular challenge that we're going to start with number 5, the business plan challenge, and then we'll come back to this particular pattern. So normally when you want to plan a business, right? I like to say things. So can you see? Oh, okay. I need to reshare. Just give me a second. I think the way this works, it allows me to change. Okay. All right. So can you see I changed what I was sharing and I'm sharing something else now. Please let me know if you can see, because I'm no longer sharing my PowerPoint.
Yes, we can.
Yes, we can see.
But planning is everything. What do I mean? The process of planning is what actually matters. It's not just the plan itself, but the process, the thinking at the back, you know, at the back of what you're doing is what is important. So the goal for you is to think about what you need to put in place to make that journey of starting your business or growing your business, you know, very worthwhile. So that's what I'll say on this first. So this is a product or whatever, a program I created. I called it the 5 Days Business Plan Challenge. I'll just share 1 or 2 of it with you, and then we'll go. Now, the first thing, and which relates to the slide I shared earlier, is planning with purpose. Without leaps of imagination or dreaming, we lose the excitement of possibility. And dreaming, after all, is a form of planning. And that is why, you know, we did that exercise that we did. You need to start thinking beyond where you are. You need to imagine and think outside the box. What can I do if I have nothing? What can I do? So I have to plant a seed. I have to start a school. I have to do an investment. Maybe people will get married, but I have nothing. So how would I do it? Okay. All right, so I think I'm unmuted now. Please, can you still see my screen?
Yeah, I muted background noise, so that's in case.
I have unmuted now. But I need to know if you can still see my screen. They can chat.
Yeah, we can see us.
Okay. All right, so I was talking about planning with purpose, right? So what kind of future do you see for yourself? You need to think about what kind of business you're building. There's this common word by, I think, Jim Collins, that wrote a book that says Good to Great. And he mentioned this word called the big, airy, audacious goal. It's called the BHAG. You need to create a dream, a vision that scares you. So I'll say you need to envision that future, that if you can't see it, you can't eat it, like Muhammad Ali likes to say. So if it's not scary enough, then maybe that dream is not big enough. So what kind of business are you building? How big is that dream for you? How big is that vision? You need to ask yourself why. So after you have, you know, seen that vision, that okay, I'm starting a software company, and I see my company having branches in maybe 10 countries across Africa. Right now, you have not even started. Probably you just have 1 room, or you just have your website, but you want to, you know, you are thinking way beyond the current position you are. So that is the beginning, the first thing you need to say. You need to determine that future goal. Then when you now have that future, you now know your why. Your why is, it goes along with the purpose, right? What I said here, that your why is deeply embedded in your purpose. It is beyond making profits, because usually when you start business and you solve a problem, you will make a profit. But your why is that thing that keeps you going. When all the chips are down, when things are not going well, you keep driving because that is your driving force. So you need to think deeper beyond you, within you as the founder, the owner, and the team, whether you are just a person or you are a group of people that come together to start. Your why ships are down. So that's the very first thing that I need to focus on, when you're talking about business planning, because if you don't know where you're going and if you don't know why you're going there, then along the way, when you lose track or when things becomes tough, you probably just give up and be like, well, I can't find a way around this again. But if you need to think, creatively and find a way to make it work. The next screen I'll be sharing, and I still want to believe you're seeing my screen, right? The next point I want to share is laying a foundation, right? That's the very next thing you need to do when you start a business. You need to lay a foundation, right? And I like to teach on business modeling, and which is usually the foundation before you start your business, before you even write your business plan. You need to think of the model how your business wants to work. Now, I told you when we are done, we did the first exercise and everybody will mute yourself. We're going to do another exercise about laying the foundation. And I'm going to go back to change my screen. I'm going to go back to change my screen and share my presentation, right? And I did this, I kind of altered the original. So can you see the PowerPoint slide now?
Yes, we can see it.
Yes, we can.
So now, the next thing we're doing now is called a silly cow exercise. Now, some of us said you're going to go out of Noah's Ark, right, with a cow. And someone mentioned that you'd use a cow for so many things. Now, the next exercise here is that how many ways can you make money from a cow? That means how many business models can you get from a cow? I need answers in the chat box as well now. How many ways can you make money from a cow? We have seen milk, and we do this in the speed of like 2 minutes, we're out. So we have seen milk. Yes, I can milk the cow. I'm trying to find the chat so that I can read answers. So how many ways can we make money from a cow? Just start typing what you think.
I'm sure you can tell the answers now. Can you tell the answers?
I can't. I'm looking for the chat box and I'm clicking, but I can't. It's not popping up. Okay, I see it now.
Okay.
I see it
now.
now. Oh, great. Okay. Yes, thank you. Yes, so cheese, hides, yogurt, minced meat, leather, cow, bone, cheese, skin, jewelry. I love that. Breeding, farming, hot dog, cheese, wool, skin. So can you see one single thing that is doing so many? That's the kind of mindset that we need to start looking in our business. Whatever business you're doing now, there is a value chain around it. There's something surrounding it. So if I'm trading clothes right now, I'm at the end of the value chain. I can walk down to the beginning of the value chain to see how it all started, and I can expand my business in that direction, right? So there's a lot, and I have so many other options here, and which is even totally different from using the cow or killing the cow. There's something called cow tipping. It's done in Spain. So it's like a sport. People go and turn the cow upside down, just like people do bull riding. It's another exercise that people do. They do it for fun. It's like a sport. Another thing is I can make a cow action figure. And I think there is cow and chicken. If I remember my children's cartoon very well, there's an action figure from a cow. So you start thinking that with just one single cow, think crazy. No idea is stupid. No idea is foolish, outside the box. And you can make money in a different way from your existing business. Look at another one here, Cow Parade. It's the largest public art event where they paint cows, just like different colors, and they paint cows and there's an exhibition. So that's really totally crazily out of the box, right? And then all the things we've been saying, the dairy, the awns, cows, they said the intestines can be used for tennis rackets, cow bones, can be used for for charcoal. I mean, people that export charcoal here would know that they import all the cow parts and they export all the cow parts. The hooves, the source of keratin that can be used to produce fire extinguishing foam. The stearic acid is a byproduct from the car that can be used for car tires. This is mind-blowing. Hydraulic brake fluids can be gotten from cow fat. The cow pancreas is a source of insulin used for medication. Can you just imagine? I mean, I would have just eaten my cow. I love beef, or taking milk or yogurt, like we've said, hot dog, biscuit, but go beyond that. So your mind needs to go boom, out of the box kind of thinking, you know. And you know, me, I would probably just say, just give me pomo and I'm perfectly fine. But as a business owner, you don't want to finish that cow. How can you keep using the same cow to make more money, And now look at the cow as your business now today. Look at the cow as your business. What else can you do without thinning out your resources? How can you keep making money from that business? So that is the essence of this. So if you have now started from the beginning, like I said, starting with the purpose, your vision, your why, you begin to think creatively and lay your foundation. Now we are on the same page. Now I'm going back to my slide to now do the second part of the presentation, which has to do with what? The real business planning. Now, the strategic business planning methodology, they will basically break it down into 4 or 5 stages. Now, a couple of these things I've said: review the current state. Where am I today? Identify competitive advantage, analyze industry trends, envision a desired state. That is the vision I spoke about earlier. Then identify, look at opportunities around you, which is the cow exercise we've done, the value chain of your business, opportunities. Analyze gaps. Are there opportunity gaps? No, I can't do this. You need to benchmark, make a recommendation, because it's not every single opportunity that you see in the horizon that you have to pursue. You need to choose, you know, sensibly, the one you have enough resources for, the one you have enough time for, and the one that even fits into your vision, right? Then implementation and formulation. So that is where the business plan now comes in. Now, I've upturned my table of contents, and we're not following exactly this, but these are the core things that we'll touch on. The first one is now the reasons for a business plan. Are you with me? If you will be, just say I in the chat box so that I'll know that I am flowing. Good, good. Thank you very much. All right, so the reasons for a business plan. First is to start a business. So many times when you start a business, you want to convince investors, right? You need to write a plan to convince people, investors, to put some capital that is necessary to start your business. That is one reason. An established firm, if you're already existing 5 years down the line, you're even in the middle stage, but you also want to draft a business plan to help you find funding for growth. That means you want to take your business from level, maybe you're at level C, we're going to Z. So you want to get to level Z, right? Or level J, you know, different milestones. So funding for growth for the next phase of the business, you need to write a business plan for that. Then you want to predict the future. That is where the market research comes in. The research, the sales forecast, the market trends, competitive analysis that you will do will help you make a well thought through predictions, because it's you make your strategic decisions with data and information that you have gathered. That's another important reason for a business plan. Now, a business plan usually doesn't guarantee that you'll be able to raise money, but you just need it as a document. Whether you are trying to pursue CBN intervention fund, maybe you are going down the gas value chain and you want to start selling LPG, you want to set up a gas plant and you need maybe 30 million, or you're already even in that business, you want to expand to another location, you want to chase CBN intervention fund that's giving 250 billion for gas industry, or you are in solar and you want to do that, or you want to go to Bank of Industry or AFDB, or you want to even just get $10,000, or no, sorry, $5,000 from Tony Elumelu Foundation, $100,000 from African Entrepreneurship, or wherever you are, whatever state you are, you need a business plan to achieve that. So many people start without a business plan. You just wake up, I want to start a school. You start. But along the way, you find yourself stuck. You want to retrace your steps. And then you want to get to the next level of growth. Then you have to go back to the drawing board and design a business plan for yourself. Yeah, so that's where that comes in. So elements of a business plan, I'll try to quickly run through this so that we also have questions, time for questions at the end. So the first part is the executive summary. Funny, The executive summary is the first part of the business plan, but ideally is what you write last. Why? Because it's a summary. So you have to have finished writing everything. Then you now show the highlights of the rest of the plan. So you write that last. That's the executive summary. The next is the company description. Key information about your business, goals, your objectives. Who are your target markets? Why are they? So now a bit of question. I'll take questions now. Yeah, I have a company and I sell ice cream. I sell ice cream. Who would you call my target market? Ice cream factory.
Children.
Children. Okay.
Youth.
Children, teenagers.
Yeah.
Everybody.
Depends on the class of ice cream you are selling.
Good, I like that. Depends on the class of ice cream you're selling. So Cold Stone ice cream will be different from, I don't know if when we were younger, there used to be a man that would ride bicycle and give us one cone ice cream that was terribly tasty. Now that I think about it, that's very cheap. Terrible taste. It's different from Cold Stone, right? So it depends on the class. So that's exactly the point I'm trying to make here. The target customers, the target market can be children, but the customers, firstly, your customer is anybody that has the power to pay. So ideally, the child cannot pay. He will go and tug his mommy's skirt and say, "Mommy, buy ice cream for me." So you are targeting the parent and you say, "Buy ice cream for your children so that they will not stress you out." That's why when you are driving in the car, the person selling popcorn, once he sees children, he will start bringing the popcorn to you so that you buy for the child, right? So your target market, your customers are ideally someone that has the power to pay. I don't want to go derail. Let me come back to my ice cream example. So depending on, another thing is that your location and the kind of your target audience. For instance, you want to sell something that is high upscale. You want to sell fine wristwatches, Audemars Piguet, Patek Philippe, and your Rolex, expensive, exquisite. You know that you are not selling this wristwatches to somebody that just wears a 2,000 naira wristwatch that buys under the bridge in Ikeja. You need to be located and you need to find people that have the capacity to buy those. So those people are not, they just like to collect expensive wristwatches. So you need to find how to target them. So your target customers are not going to be everybody. Irrespective of ice cream, it tastes good to everybody. It depends on your own kind of product, who you want to tailor it towards. So that's how you need to target your customers. So you have to be specific, not that everybody takes ice cream, so everybody can buy it. Yes, but can everybody afford it? Does everybody like the kind of flavoring you have even put or the innovation that you have put in your ice cream? Not really, right? Even if you are selling Lego and they wrote on that Lego box saying, this particular Lego is good for ages 1 to 99 years old. Most likely, our adults will not buy it. People that have young children are the people that will buy it. So you need to focus and try to target your market. So the next thing you talk about on that company description is the USP, the unique selling proposition, which is tied to your value proposition and saying, why would your customer choose you over your competitor? Then the next thing is the solution benefits of the target market. Next, we move to market analysis. Under the market analysis, you talk about the ins and outs of the industry, the specific market of interest. So if it's a software development interest, if let's say you are in the fintech space, or you're talking about payments, or you want to go to lending, depending on where you sit in the industry. So you need to be very specific. Because a fintech startup that starts and say for instance, Paga, they focus on payments. Meanwhile, BizNurture or what's the name of this company now? Cowrie Wise or something, all those companies, they focus on investment. So they focus on different target segments of the market. So you need to be very specific. You need to use data, historic information to predict the future. Then you need to talk a bit about your customer behavior, how your customers will fit into all the story that you're talking about. And then you see income level of that target market, because it's not everybody that will fit into your target market at the end of the day. Next, you talk about competition analysis. Now, here, direct and indirect competitors. Okay, so I want to go into the business of, I want to develop a machine to dry gari. I want to develop a machine to dry gari. I want to sell to farmers in the rural areas. Who will be my competitors? It's a question. I'm developing a machine to dry cassava flakes to sell to farmers in rural areas.
Those people that fry locally.
My competitor that fry locally. How do they fry?
They use local fryer.
Local fryer. One. Local fryer will be my competitors. That local fabricators. Okay. What other competitor will I have? For me, my first competitor. Oh, yeah, let me hear. Sorry, you're about to say something.
Yes, bigger agricultural industry equipment companies like John Deere.
Yes, exactly. People that are also in the same, coming into the same market to capture the market just like you. Yes. Another competitor will be the floor. A lot of people in the local environment, they spread this garri on the floor. So it's the sun, because the sun is the source of heat that they rely on. So I want to bring this fantastic solar drying machine to dry pepper, garri, and all that. What would this local woman ideally do if she doesn't have any fryer? She will lay it bare on the ground, on the sun. So I have to find out, why would this woman come to me rather than using the sun? Or why would she come to me rather than using this local fabricator? She will come to me rather than using the sun, because if she spreads it on the floor, it will be filled with sand. If she spreads it on the floor, she has to spend several days. My own dryer will speed up the process. If she goes to my competitors, those other big companies, she has to use electricity. My own dryer uses the sun, but it is solar. So I capture the sun, and it's cheaper and all that. So that is the direction you need to start looking at. And it's thinking in terms of your value proposition, right, that I mentioned earlier on when you're talking at your competitive analysis. So that's your stack up against your competitor. What makes you better? So after looking at your competitor's weaknesses, their strengths, the price, the quality, how accessible and innovation they have, then what makes you better than them? That's the next thing that you need to think about when you want to talk about your competitor analysis. Then there's also barrier to entry. There are some industries that are so easy to walk into, meaning that, let's say I want to start a money lending business right now. All I need is in fact, I'm even going to Tush if I start getting a license from government. First now, I will look for my auntie that needs money, right? She wants to do an LPO for an NGO and she doesn't have money. She needs 1 million. I have extra money. I say, sister, give me on 10% interest. I put the money in my pocket and I've made my money. If I want to get a little bigger, I'll go to Ministry of, I can't remember, Ministry of Interior or something, Lagos State or whatever state I'm present in. I will get a certificate. I'll start lending money to all the women in the markets. And I already started money lending business. I don't have to have a CBN license. So there's low barrier to entry. So you need to think about it, that how easy is it for other people to come into this business? For instance, if I want to buy an oil block, it is extremely expensive, right? You even to drill an oil well is $30 million. So that's very expensive. Not everybody will be able to go into that industry. So I have to have enough financial backing to come into that industry. So it's a weighing thing. You have to weigh how easy it is. And it's not that because there's easy entry, you wouldn't go, no. But you need just to know that this industry has this kind of weakness and I need to protect myself to have that innovative edge to move on. So basically that's it. Then you talk about the management and organization. So what kind of legal structure that you have? Are you a sole proprietor? Are you a limited? Are you a partnership? And all that. Then who are the people on the team? Executive teams, their scrim, their job roles. So if you are 3 people, who is the CEO? Who is the CFO? Who is the COO? What does the CEO do? What does the CFO do? What are they like? Usually just like you employ a staff, you give the person a offer letter with job description. So everybody on the team will also have job description. Even if you're running a school, I am the head of school. My role is to organize XYZ. This is the accountant or the bossa. His role is to do XYZ. So that everybody, just having that kind of structure within your organization is very key. Next, you talk about your products and services. Facts about your products and services, planning cycle for you to get your agri product to turn into baby food. Say, let's say you are manufacturing baby food, you mix, what do they call it now? Millets and granules, you process it and you package it. How long does that take? There's a planning to that for you to create and for you to finally sell. You know, you seal it, you air dry it and everything and package and sell. There's a process to that. Then when you finish the product, how long would it last on the shelf? Product life cycle. Then how would they meet an existing need? So these new products are bringing into the market. Please, why are they not buying Cerelac? Why do they want to come and buy that, your baby food that you've just created? You need to talk about how it's going to meet the existing need. Then suppliers, how do you get your raw materials from? Do you go to the interior farms to get your millet, or you just go to Okiodo or Mile2 Market to buy the millet or the maize and the granules that you need? So you need to think about all that. Costing, so you can see, like I said earlier on, that the business plan document is just a piece of paper or an online PDF. It's the process, the thinking, the planning process behind it that is so important, that when you do it, you can't forget it. You have lessons from it. The writing it down is the documentation so that you will not forget what you have done, right? But the process is key. It helps you think outside the box. Someone says, can you get the slides? Yes, Adejoke will get to that. Yes, we'll get the slides. Anything related to patents and copyright is also what you put on that copy. So if you developed a fintech, software product, whatever, that is solving a very important problem, maybe it helps cars to run on water, but you need to input that your device into cars before they can run on water. So you have to patent it or copyright it. So you tell us about it so that we will see that. Then we go to your marketing plan. So basically, I think this slide covers even the future things, but I'll see if I will still get to the front. So your marketing plan talks about how you want to get those products and services to your potential customers. So basically, you're thinking about your channels, like how do you get them there? Now, after you've defined your target market and where you find them, you need to pinpoint specific steps to take them there. So are you going on digital media, if it's a digital product? Or are you going to pay NTA for adverts? Are you going to use billboards? Are you going to do flyers? Are you going to do road shows that, you know, you employ people that wear all those costumes that they wear, Teletubby and all sorts, and they'll be dancing on the street and all that? Are you going to do that? So you need to do that thing of that. Now, there's a cost to all these things. If you are going to run a Google ad, there's a very huge cost to it that you have to factor. If you're going to go to AIT or NT and tell them to talk about your business, or on a radio program, there's a cost to it. So you need to mention the budget that will help you implement that strategy. And I'm so happy that Femi, when he spoke about budgeting. So you see that budgeting is key. It comes also into your business plan. In fact, when I was speaking and I was listening, I'm like, good. The financial planning aspect of my presentation has been sorted by him. So all I'll just do is to pinpoint a few things because he spoke at a great length about that aspect. Next is sales strategy. So how do you sell this product? Are you going to hire sales rep, or you are going to have agents? So you are manufacturing baby food like I illustrated earlier on. You have 1 million cartons. How are you going to get them to Okeare Market? Are you going to have agents, or you have staff that will be going from ShopRite to Ebano to the different supermarkets? Or are you going to do a combination of that? Are you going to offer benefits and discounts? So you have a service product and you say, buy one, get one free. Or or you are going to use, very interesting, for what marketing technique they use for this forever living product kind of thing? MLM, multi-level marketing. Are you going to do that and you are selling food and you want to use multi-level marketing? So is that what you want to use? Tell us how it's going to work, right? And you need to plan it and be sure that, are they going to be benefits, discounts, promos? You know, so those are the kind of things. Of course, next you talk about the financial projections. Review the financial, because when it comes to marketing, there's a huge budget tied to it. Sales strategy, there's a huge budget of the cost of the employees tied to it. And so you need to talk about your financial projection. So how did you come about this financial projection, your underlying assumption? I will not skip here. I'll just, because I'm going to repeat this part again. But basically, there are assumptions to talking about the money you are going to make. You have to make assumptions to talk about the sales you are making. You have to make assumptions to talk about the costs that you are incurring. and then at the end of the day, the revenue that you make and the profitability that you make. So what are the assumptions of interest rates, exchange rates? Are you buying, if you're exporting cashew nuts, what assumptions have you made of the exchange rate? Did you make it at 400 while dollar is now selling at 440? There's that fluctuation and there are risks that are associated with that. There's inflation index going up in the economy and all that. Then there's COVID-19. Did you even think about that? Would you even have ever thought about that in the first place? So those are the kind of things that you need to talk about. Then the next is the funding requirement. So, after doing all this thought process, thinking about your costs, your expenses, thinking about where you want to play, how you want to win, which industry, which markets you want to enter into, everywhere you want to play, there's a cost attributed to it, right? So funding requirement now comes in. The amount of money you need that you need to fund the business is very important. When you are doing your investor pitch to an investor, you have to state the ask, right? Your ask is, how much do you need? So for this reason, I'm requesting for a sum of $100,000 so that I can do X, Y, and Z. So you need to know your funding requirements, and that goes down to all the things that we've talked about earlier on. So, of course, if you're also indebted, meaning that if you've got grants before, you've got funds in the past, you have to state it. If you got equity from yourself, your co-founders, or whoever who wants to give you money, you have to state it. If you have borrowed money from a microfinance bank, from a fintech startup, or from a commercial bank, you have to state it. So you have to also state the mix of the funds, equity versus debt, and then the details of utilization. How do you want to use these funds that you got? So you'll be able to say 5% of this $100,000 will go to staffing. Of course, staffing will probably take like 40% anyway. 20% will go to marketing, X%. So just break it down according to the plan. That's where the plan would have come in. So at this stage, I want to pause before I keep going, because the next couple of slides just talks a bit about what we've talked about. So we've talked about marketing and sales. So this slide now talks, just goes a bit deeper into the marketing slide, and the next talks about financial plan. So I'll take questions now, if there are any questions before I go ahead. And if there are none, we'll continue and have further questions again.
Yeah, please, I have a question.
Yes, please.
I want to know what percentage do we break up? Like you said, we break those expenses up into percentage. Now, what percentage do we put for salary?
Oh, no, it just depends on how many people you're employing. I'm just saying you present it in terms of if you have 100 Naira and the salaries that you plan to pay is 20 Naira, then that means your salary is 20%. If the salary that you plan to pay is 50 Naira, then that means your salary is 50%. I'm just saying that salaries many times takes a larger percentage, because if you want to employ people that are worth the salt, you have to pay them good money. So that's what I just mentioned. But basically what I mean is just show a percentage. If I need X amount of money, this is how I will spend it, percentage-wise, so that people can have an idea of what you're doing. Yeah, thank you.
Okay.
Any other questions?
Yeah, hi. So I left my question on the chat.
Okay.
Basically saying that I'm on the process of writing a business plan. I want to know which aspect of the business plan component is most critical and why is it so?
Okay. Like I said earlier, I like to begin at the beginning, having a clear future, because a clear vision. Because if you don't know where you're going, right, you will not know how to get there. If I'm going to Badagry right now, there are probably like 3 routes to get there, and I need to map my direction. So that's what the business planning does to you, or helps you achieve. So you need to know your destination, which is your vision, and then the business planning tells you how to get there. How you will get there are the things that you meet on the way, the cost that you will incur. So every part is important. Because even when you're talking about the financials, the money that you're going to spend, the cost that you're going to spend, and the money that you make, there has to be assumptions on the revenue. So if you plan to sell 1,000 bags of XYZ per day, then that's an assumption. And you say from that, I'll make 200 naira on each, multiplied by 1,000. So that assumption is there. So that is also important. Now, to sell that 1,000 bags, there are human beings, there are staff that you employ to help you produce and to help you sell. So that is also important. So I think the whole picture is very important. So I can't say one is more important than the other, but it's just to get the different stages right to arrive at your final question. Okay, so I found the chat box now. Next person says, I'm in the process of, okay, I've read yours. Fashion business, please, how do I go about getting data and statistics for your business plan? Okay, so 2 ways. First, you can go on the internet, right? It depends on what you're looking for. If you want to have an idea of what people like ready-to-wear Ankara for children. So you go on the internet and see what other people are doing. If there's anybody doing that, and have a sense of if they have customers. The next thing you do is to also do a survey. You do a survey and say, help us feel your preference. How much would you like this kind of product? You know? So they do a survey that you share to people. Depending on how large your budget is, really. In fact, if you look at this FMCG group, like Olam, for instance, they will do a survey for a product. This is their biscuits. There's this nice biscuit that they do that we buy in traffic. I can't even remember the name again. Pure Bliss. Pure Bliss biscuit, they've come, you know, to our venue before to rent and to do a survey on people's preference for the different tastes, right? So they take people, they give them forms, they taste the biscuits and then write what they feel about it. So they give survey respondents. So people go, I mean, big companies go to that extent. But for you, you might just have to do a digital survey where you let people feel information about what they like, and that will help you get some data and information. So please, which ministry will undo lenders in Lagos? I said I can't remember the ministry, but I'm sure you can just browse on the internet. You get ministry, I can't remember, but there's a state license that you need to get. How do I conduct a marketing research? So basically, this is similar to what I just answered for the fashion business. You go on the internet. So you go Google, you go Instagram. If you want whatever kind of business you want to start, I am almost 100% sure that somebody has done something like that or is already doing exactly that. So have a feel of what they are doing, what other people are doing. It's like, I usually call that spy the land, just like the spies of Israel went and they went to spy to see what other people are doing and said this land is flowing with milk and honey, and somebody else will come, no, there are giants in the land. So it depends on your perspective. So let's look at the giants, let's write their details down. Let's see if what they are doing, what they are not doing, what we can do better, how we can come in. Basically, that's the essence of marketing research. All right, so I'll go on now and talk about a marketing plan. So I said it, when you want to go to Badagry, you know your destination, a roadmap, how do you get there? So a business tool used to organize, you want to use it to pursue execution, and you track your performance. That is why many marketing and sales teams, they do what we call MPR, monthly performance report. I don't know, other teams probably do it too. A marketing plan can help you include different marketing strategies. You know, there are tactics and strategies that you can use. So if you have that plan, you have different strategies that will help you achieve that. It also helps you to connect the blocks to make sure everything fits in perfectly. Next, I'll talk about components of a marketing plan. First is to have a focus, right? Define your target market narrowly. You have to be laser focused. Who exactly am I interested in? Then, how do you define your target market? Are they families? Are they new couples? If I'm starting a retreats kind of what they call like an holiday vacation kind of business, I want to focus on couples because I believe that they've been working so hard, they get busy and they need time, you know, a way to have a couples time out. So I want to focus strictly on couples, or I want to focus on singles. I want to focus on adults. Depending on where your business fits in, right? You would, you know, need to define who the product is defined for. You can have multiple products defined for you, but every product must have its target. And then your company as a whole can have different audiences. And then you need to decide where you want to play. To win, you need to know where you want to play. Then the product. The product focus, of course, must match the market focus. Is the product durable? Is it super speed here you want to focus on? Is it quality? Am I delivering high quality? Or is it that it's easily accessible? Or is just the safety aspect? This product is safer than, you know, using the other substitutes. You need to think about that. So the baby food example I used earlier on, she would say that our baby food is designed specifically for infants that are between toddlers, between ages, I think 6, that's when they start eating cereal. So maybe 6 to 3 years old, and especially for picky eaters. Now, young children, many times, they avoid vegetables. So she will say that our own baby food, she has added vegetables to it. So it's very healthy, nutritious. It will help picky eaters to eat and, you know, grow robust and healthy. So that's clearly defining your target market, not saying that I make baby food for the whole world. The whole world will like baby food, but it helps you narrow down your marketing budget because you're not all over the place. You're not running around just trying to please everybody. You're trying to please the segment that you have chosen. And then when you win in that segment, you can move to another product for another segment. Then concrete and specific and measurable. That's what they call a SMART plan. A good market plan is full of dates and details. By December 2020, we would have sold XYZ number of bags to XYZ number of people. You have to have things that you have measured. Now, this measurable facts, XYZ number of bags that you are selling, there are activities that helps you do that, right? You don't just say, I'm going to sell 1,000 bags. How exactly would you achieve that? That's the measurable part of it. And then you need to plan. You need to seek know-how. If you don't know how to do, you need to either employ or partner with people. There's a startup company that I was working with, and in their 3rd year was when they started employing CFO and started employing director of finance, and they have huge volumes in the agri space. And you'll be wondering why. In their first 2 years, they were basically outsourced accountants, outsourced HR, outsourced XY, outsourced everything possible. You know, they will get a expert agri person that is not on their payroll. They'll call you when they need them. It might not work perfectly for everybody, but it might also work. So you need to look at how to balance that out. Next, marketing, key responsibility and accountability. So assign every part of the marketing plan to a specific person who will design the product, who would do the branding, who would take it to the market, who will physically go to a co-market and go and talk to all those market people and introduce the product, right? Who and when. Measure the results of every task. That's why I said who and when, and what is the volume that the person must achieve. Then you need to hold people accountable. And that's why daily reporting and all that is important. Then you need to constantly review as well the marketing plan, because really it's a process. It's not cast in stone. So you come up with ideas and strategies, and then you review if it's working, you improve it and make it better. Yeah. So next I will talk about financial plan. I'm not going to spend so much time on this, right? Because we have learned a lot from Femi earlier on. But basically, you need to, if you are a startup and you are just a couple of years, maybe less than 3 years, you have a statement of affairs that just gives you basics. You might not have a full balance sheet and income statement and tax sheet books and everything, but you need to have something just to show this is what we achieved this year and all that. Then your CapEx are your expenses that are huge, and you focus on assets. And OPEX are the operating expenses that covers things like salary, running costs for the business, and then funding requirements. I'm going to go back to that. Okay, I'm going to go back to that slide that's hopefully is still open. And there's something here I wanted to share. Yeah, so learn to manage your expenses. Small leak can sink a very great ship, right? So basically, here are tips for effective financial forecasting that I just wanted to share. When you want to start with your sales forecast, your forecast must be based on relevant assumptions. If you currently have sales, then that's a good place to start. So meaning that if you're already selling 100 packets of your product a day, or you attend to 10 customers per day, then you say if you want to go in the future, you can say 20% increase, right? So you consider your increase in production, whether it's sales monthly, quarterly, or yearly. Then you need to tie that sales forecast to an expense budget, which is what I had mentioned earlier, right? Your projected future sales figure must be accompanied by marketing efforts, staffing, production costs, and other operating expenses. There are costs associated to every single thing you do, so you need to prove that. So you won't just say, I'm going to want to grow my business by increasing my sales from 100 boxes to 500 boxes by the end of the year. Good dream, right? Very good. But how? There's a mindset, there's a thinking in between 100 and 500, and there are costs associated with that. So you need to put that into consideration as well. So cash flow. Cash, they always say, is king, right? So you need to develop a cash flow that would help you understand how liquid your business would be in future. Then expenses. You need to, I like to break the expenses down. The one that you incur at the start, and then the one you incur in the cost of running the business. So cash flow is basically cash in, that's the revenue. And if you look at this chart, it shows customers paying the business. The business is this building in the middle. Cash are coming in, the customers pay. And then look at the things you spend money on. You spend on rent, you spend on taxes and your salaries and wages, operating costs, petrol, repairs, everything that you need to do to run the business, right? So you focus on that to make sure that you capture all the different angles of the cash flow. So basically, okay, so I think I would, okay, so there's something here, common pitfalls in financial projection that you should avoid. Okay, fine. Number one pitfall, you don't want to be too optimistic. Yes, we have a big, hairy, audacious goal. I want to be in 10 states of the Federation over the next 5 years or over the next 1 year. That's fine. But there's a thinking to it, there's a systematic process to growing, right? So that's what you need to have at the back of your mind. So that if you have very huge, audacious, unrealistic goals, right? It will even be a turn off to anybody reading your business plan. Meaning that you say on day one, I'm going to hit the ground running, and by day one, I'm selling 1,000 boxes of my baby food. Yes, okay. We'll not to now see how big your company is, how much have you even raised, where have you started, have you done this before? So if they don't match, if the big dreams doesn't match the plan behind it, then it just turns people reading the business plan off. Then you need to research average salaries and the average sales rather in businesses that are similar to yours, right? What are they doing right now? Especially if you don't have data. Now this is if you don't have data, meaning if you've not done this before, you are starting from scratch. You need to see what other people, that's why I work Occupy the Land. Sometimes you ask people that work in such organizations, you work here, okay, so what do you guys really do monthly? What do you guys do daily? People are excited to talk about their business and their growth, so you get that kind of information. Then if you have your own historical figures, fantastic. You just do 20% growth or 30% or 15%, depending, or 50%, really depends on where you want to go. They make your forecasts based on need. So immediate local target population, right? What are the area of focus and what do they usually spend, and how would you attend to that? Then many times, right, you don't want to have just one sales forecast. What I try to do is to have 3 cases, a low case, a base case, and a high case. So worst case scenario, I should sell 100 boxes of my baby food. But on an ideal case, I should sell like 250. But if we're super pushful, if something exciting happens, I would sell 1,000. So these are 3 cases, so that you know that you're working with the base case, but investors will want to work with that low case, so that if you have now the base case or the super high case, then that's like a plus to them. So that's a reasonable way to project when it comes to sales forecasting and revenue forecasting at the end of the day too. Then you want to ensure that you estimate your cost. And I think I cannot overemphasize this, right? You'd be sure that every cost that goes into the business, you are estimating it properly. When it comes to wages, marketing costs can be very huge many times. So you need to also estimate that appropriately so that you will not have issues at the end of the day. If you expect that you're going to spend a certain amount of money and you find out that you can't reach your sales forecast simply because you didn't estimate your cost enough, or it cost way more than you planned or that you expected to run the ads that you were going to see. Okay, so I think that's about all. Okay, so I moved this silly cow exercise to the front, so we've done that already, right? So I would now close by saying a great product manager, a great business person has the brain of an engineer. You are creating something, right? And an entrepreneur is basically oftentimes a product manager. You have the brain of an engineer. You have the heart of a designer, but you are super good with your speech, right? The speech of a diplomat. You are wearing those hats. You are juggling. That is what you need to do. So I think that is where I would close, right? But before I do that, I'm seeing a couple of questions here. Okay. How do I get information about Uber? I'm not sure this question is directed to me because it doesn't pertain to what so maybe Joke can answer this. From Facebook, Twitter, and Twitter, as info about online classes for students. Okay, great. Oh, I see. Okay, so Pierre Como Ade Ferrako, what you're trying to say is you want to create online classes for students. Okay, so first you have to decide where you want to host your online classes. Do you want to host on Udemy? You go to Udemy and you do a research. Their platform shows the courses that trend, the courses that exist, the courses that nobody, in fact, like the blue ocean where there's opportunity, you see that. Then like this Onogbemi said, on the internet, Twitter, Instagram, you see other people doing what you do and you see the way people respond and embrace their courses. That will help you have an idea of what people are listening to. But it also starts with your own abilities, what you can teach. So what can you teach? What are you good at? Because that's where you put your heart into, and that's where you'll be able to deliver very well, right? But it's how to deliver it that you need to tweak. So for instance, if I'm an accountant and I want to create an online course that says how to manage your expenses or something, people might get bored. But what if I create an online course and says the pricing masterclass, how to make sure you price your courses, your price your products properly to attract good customers. You see towards pricing, people like to talk about money. Customers, people like to get more customers. So the balance between that, people would be attracted to that. So it's how to deliver that matters a lot of times. Question from Lower says, is it advisable to go into a business that is saturated already, especially if the saturated market seems to be lucrative, or is it best to look for a business that have very few players to avoid competition? The point is that you cannot avoid competition. So coming to a saturated market, that means you want to come in as a game changer, right? What are you? That's where you're bringing your innovative cap and saying, what is my business doing differently? How can I upturn the market? How can I change the way people are doing business? I mean, when Uber came, taxi business is saturated now. We have taxi, we have transportation, everybody. But they came with an app with variable pricing. So I can take a cab from my location to my children's school and it will cost me maybe 600 naira. Meanwhile, before, the cab driver beside me will tell me it's 2.5. My children's school were probably not so far from my house. So you can see that it's about what you want to bring into the market and the strategy to hit the market. Do you know the funny thing about our space is that when you're doing something and people see that is successful, people flood into it. I remember clearly when we were very young and when we're very, very small, people used to put water into nylons. That's ice water, right? And then after a while, people started sealing the sachet and they called it pure water. And suddenly everybody ran into that space. Pure water, pure water, pure water, pure water, and it became saturated, right? But hey, people still go into the space today and they still succeed. So it's a play. You need to balance it, and but it starts with for me, it always starts with you. What do you want to do, right? What is your vision? What future do you see? Are you trying to jump into a business because you see people there? Or are you starting business because you feel there's a need that you are solving? Is there a market need that you are trying to provide a solution for? It starts with that. So if you can position well, create that solution for the market, then you would always find a way to thrive, irrespective of the saturation or not. Because the market may not be saturated. It's just that on your street, though, there are plenty of competitors. I mean, education, for instance, schools. I've seen schools that have closed down. I've seen schools that have relocated because they think maybe the people in that area are not well-to-do to pay for their services, or there are too many schools on their road. But you see still schools that still survive. So it's a play between what you really want to do. Okay, I think I've answered your questions about online classes. Yeah, someone says you can use Teachable and Google Platform. Google Classroom is also a good option. Events planner, Adeome says, he's been finding it difficult to navigate COVID-19 season. And what are the advice for this particular industry? Yeah, this is one of the businesses that has suffered the most. Events planning, hotels, restaurants. I also run a workspace or like a training center, and people shifted from physical training to online. So there's a time we shut down our business for 3 months. So it's crazy. I think it's always trying to find something to do around what you're doing. Okay, so for us, we were running a children's program. We run it 3 years consecutively. It's an online, it's a business academy. So it was a summer program. Every summer we gather children together, we teach them business, innovation, entrepreneurship, financial literacy. Sometimes we do coding as well. It was good. Now, COVID came, we couldn't gather children together. And we said, let's do an online course. And we called it an online mini MBA for children. I couldn't believe the turnout. For one, parents were tired of online school, right? So I was a bit worried that would people show up. But guess what? It was something different. We did it. We had to do it twice. We did a repeat because there was a rush for it, and that was already exciting. Now, so what are we doing? We're starting a business club, right? That we are running just like ballet. What do they call it? Ballet, whatever. Football club, literacy and debating, taekwondo club. We are starting an online business club for children. So we're leveraging the times. There's COVID-19, yes, we can't gather together. But what does that do to us? The program we did, we get children from the US, from UK, from Dubai. They would not have come to our location in Ikeja if we were just doing it in summer. But because it was online, they were able to attend. So that's what I advise you to do. I advise you to look in your value chain and see what you can do. It's necessary. See, people do, one of our lovely sisters did her 50th birthday online. I am 100% sure she used an events planner because the event was fabulous. So events planners can also do things online. It just depends on what I've seen an events planner that says she will package the video recording, the props, everything that you need to do to make sure it works, right? So I think it's just for you to just look within your strengths and your strengths and what you can do. You tweak a bit, from your space if you have to, as long as you're not going all around the place, and you'll be able to find where you would play. So I think that would be what I would say. All right. So thanks for that question. Thanks for all the questions that that you've asked. Any other questions, please? You're welcome. Any other questions, please? I've actually come to the end of the. Oh, I'm sorry. So I need to start looking at raising up of hands. I don't know how to find that. So please go ahead.
Okay, thank you, Olaomi, for such an insightful session. I've learned quite a lot. But I have a little bit of challenge when it comes to deciding my target market because of the kind of business I do. I'm into TV content. I develop and produce TV programs. So for instance, we have a new show coming out soon. The show is focused on women. So here, my target audience I know are women of certain demographics, but they are not necessarily the people paying or helping us monetize it. So the people paying are maybe some brands that need the attention of these women who potentially are going to be glued on their TV or their devices watching our show. So my challenge here now is when it comes to identifying my target market, how do I separate or identify these two segments that are also tied up, to be able to reflect effectively who my target market is? I don't know if that is clear.
Very clear, very clear. So thank you for your question. Your situation is actually very common. There was a story I read of a startup that they developed a product to help hospitals, and they were targeting nurses. So they were doing their adverts, campaigns to nurses, because the nurses are actually the people that use the product. But they found that they were not moving sales. Why? Because the user is not always the customer. The nurses are the users, but they do not have the capacity to pay. Who pays? The hospital board, the owners of the hospitals. So they had to change their campaign and find out how they would reach the people that would pay. So the product is developed to suit the user. So in your case, the product must appeal to the users, the listeners, the audience. But why would I, as an NGO, pay for the product? Because I see that it's attractive to the user. Because I see that it is helping me achieve my sustainable development goal or my corporate social responsibility. So when you're doing your proposals to the NGO, who would be the paying customers, you have to make sure that you show them how it is helping them achieve their own goals. As much as the product is appealing to the user or the audience, it has to also appeal to the customer, who is the person that will pay. So I think that would be my submission.
Okay, so sorry. When I'm now articulating this on my business plan, who among them do I identify as my target market?
Your target market will be slightly different from your customers. Your customers are the people that are paying, but your market, which is the audience, the users, you have to clearly define that in the product. The segment where I spoke about, talking about the product. This product is designed for women within a certain age demographics. It helps them do XYZ, so that the person that wants to pay for that product will know, right, that this product, and especially when you're now doing your proposal to those customers, your pitch or something to the customers, you have to let them see why that product and how it's helping them achieve their own goals.
Okay, thank you very much. I appreciate this.
You're welcome. Yeah, I'm open to other questions. I'm sorry, I can't find the raising hand part, so really can't. No. Yes, please go ahead.
Hello?
Yes, please go ahead. Good morning.
My name is Taiwo. Number one, thank you very much. The challenge I'm having is I'm learning to use my device, and I've not been able to see a lot of stuff that were displayed because of my visual impairment. So I don't know how I can be able to get all the materials that were sent.
Yes, the slides will be shared. The slides will be shared.
To my email or my WhatsApp number?
Joke would answer that question. I'm not quite sure.
Hi, Taiwo.
Hello, yes?
Yes, are you on the WhatsApp group?
No.
Okay, Simisola has been sharing the link to the WhatsApp group. Please join the WhatsApp group. So this presentation and the recordings of these trainings are going to be shared on the group. So you have access to them.
I don't have their WhatsApp. How will I get the WhatsApp number?
Simisola has just shared it on the chat. So just check the chat. You will see the link to join. Can you hear me? Check the chats. Simisola just shared the link.
He's not a registered voter in a state. He's not supposed to vote. So on the election, the only people who are...
No.
Can you see it?
No, I'm not. I can't see my phone, but I hear my phone talk.
Hello. Oh, I see. He said the word visual impairment.
Yes.
Okay, do you know what? Sarah, can you just tell us, give us your phone number and then we'll add you.
Okay,
Just give us a phone number now and then we'll add you.
0706.
Hold on, please.
Okay.
0706, yeah.
1234.
1234.
999.
999.
Yes, thank you.
Okay, I'm dialing your number now. So this is mine. I'm going to add you. So
Okay.
just in case you have any more questions or whatever, I can just. The phone is ringing now. So I'm going to add you. Yeah, so Tyrell, I just called you now. So I'm going to add you. Okay. Then you have access to all the materials and everything you need. Okay. All right. Okay. Any more questions for Laomi? Okay. I mean, Laomi has to take. I mean, she's busy making the dollars, making the green notes. So we had to. I had to, even as at 1 a.m. this morning, we were chatting and, trying to come up with stuff for today. So that was me. So thank you so very much for your time. Really appreciate it. Okay, EMP Love Squad 2020 gang, can you just allow me some love? The way we know how to do it.
Thank you so much.
Thank you, ma'am.
Thank
you very much.
Thank you.
Thank
Thank
you,
you so
Laomi.
much. Thank you so much, Ma.
Thank you. Thank you very much.
So
Thank you. That was
impactful.
wonderful.
We need your email.
Thank you. Thank you. Nimi was asking for
Thank
my
you.
number, so I think I'll find that. Okay, thank you so much, everybody. I'm happy to be here.
Thank you, allow me. Thank you.
Okay, I'm actually adding my phone number here because I didn't have it before.
And your email?
My email is there.
Thank you.
Yeah, so 0033453896. Yeah, so that's my phone number. It's also a WhatsApp number. So you can reach me.
Okay. So as soon as you get the slide,
Again, please.
all her details there.
So today is beautiful.
Laomi, thank you so much. I mean, you broke down business planning. And that's why I love about you guys. You always break things down so easy to understand. Like I call it more kind of stuff.
Thank you. Thank you.
Thank you. Thank you. Anytime I listen to the silly cow game, I always enjoy playing the silly cow game.
I think I can't do without that exercise.
I know. I know, right?
Yeah.
Yes. Thank you so much, Laomi. God bless you so much. Thank you for spending your time with us. And then, yes, I guess now we can usher you with love.
Okay, bye.
Let me say, your session is an answered prayer. See how God has sent you.
Thank you. Thank you, Nimi. Thank you very much.
Thank you, Laomi. So we'll see you.
Thank you. Okay, bye. I'm leaving now.
Thank you. Bye. Thank you. Wow. Another explosive day.
Thank you, Auntie Joker.
Thank you, Auntie.
Thank you, Auntie Joker. Thank you so much. Thank you, Auntie Joker.
I'm just doing bomb. It's getting better by the day.
Yeah, we just got started, so we have 40. We just done 6. So that we have so much more. We have HR, we have customer experience, we have customer service, we have strategy, we have taxation. In fact, just get ready. You have so much more. Okay, Chema,
I should have started this one long before I started doing anything. I should have started before I started anything in the first place. Because this is going back to the drawing board to put things right. Hi. Thank you so much.
Better late than never. Yeah.
Yeah, so I said, now you can do go back and then start all over again. And this time, do it right. You know. Thank you. All right, Shoma. Lady Chi. Can you just wrap up?
Okay, thank you everyone. It's been a pleasure having you here once again since 8 o'clock. I know some of us said initially they are still waking up from sleep and all of this. I hope that anyway, I'm sure we are fully awake after the first section. So thank you everyone for being on the call. So we'll share the recordings and the presentations with us on the WhatsApp group. So please, if you've not joined the WhatsApp group, Simisola has been sharing the link on the chat room. So just join using that link so that you have access to information, you have access to the recordings and also the presentations after each training. We also have our class captains and they've just been superb. It's just been really amazing, like in the course of the week, all of the chats and all of the drilling that's been going on. Well done, everyone. Also, you're also reminded of Mr. Leke's assignment, though. So please do your assignments and submit. Remember, you're in class.
That's very important.
Don't forget to do your assignment.
How do we submit it, please?
Okay, we'll talk. I will talk to the captain and assistant, and then we'll see how we're going to also submit it to a central place where we can send it to Leke. So, assistant, class captain, Wholesome, Peyi, are you guys here? So we'll have a behind-the-scene family meeting.
Please, we want to see your face.
Exactly. Okay. We need to see your face.
By popular demand. By popular demand, class captain.
Class captain, yeah, show your face. Show face, so.
Wholesome, Chukwebuka.
You can.
Where's class captain?
Brain.
Wholesome is saying hi. That's Wholesome.
Hi.
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 I'm actually a very reserved move this morning, so I'm reserved.
Deep.
I'm in the spirit.
Is that right?
What's happening?
They see you.
Faye, where are you now? Faye, let's see your face.
Faye is in the chat room. We want you to be in the gallery, in the chat room.
Okay, Faye says she can't show her video. She is in a dark room.
Oh, okay.
Dark room. Is she counting money there?
Wholesome, you've come again, I beg, this morning.
Okay.
So they will let us know how we're going to submit our assignments eventually. So every other information, will be captured in the group. We'll keep sending them to the group. Yeah. So this is another time where we greet each other again. For those of us that were not there in the morning, where we greeted one another. So this is the time. So start saying hello to your classmates.
You can call yourself by name.
And turn your video if you can. And just
hello.
Shout out to one another.
Hello, everyone.
Hello, Obina. Shout out to
hello, everyone.
When are we doing our self-introduction of class captain?
I didn't get her number. Can someone help with the number that she gave?
Which number?
We'll share her presentation is on her slide, on the last slide. So her email, her phone number there. Yes, so you have it when we share the presentation. Yeah.
Okay.
Yeah.
Thank you.
Okay.
When are we doing our self-introduction?
Hi, Joma. Hi, Adijoke.
Very well, thank you.
Shout out.
Hi.
Hi, I just added you.
Shout out.
Good to see you all.
Yeah.
Hello. Hi.
Okay, bye.
Hi, Omolade.
Hi,
Shout out.
moderator.
Modipe.
Hello, everyone.
Naomi. Shout out.
Hi, everybody. Thank you so much.
Bye, everybody.
Abby,
Thank you
shout
so
out.
much. Thank
Thank
you.
you.
Thank you, Simisola.
What?
Thank you, Auntie Joke. Thank
Thank
you.
you.
Bye, everyone.
Simisola
Bye,
is asking
And
everybody.
though.
jokes. Bye.
Bye-bye.
Wholesome and Feyikemi
Thank you to
introduction.
everybody.
Over
See you
to
next
you.
week. I love you.
Thank you.
Thank everyone.
Bye,
See ya.
everybody.
Bye.
Everyone.
Bye.
Bye,
Enjoy the rest of
Mimi.
the Saturday. Now you can join B conference
Bye,
now.
everybody.
You can join the
Bye,
big
everybody.
conference, so
Yeah,
I know we are late, but
very
we are
late.
we'll get one or two things out of
Bye,
it anyway,
everybody.
eventually.
All right,
Yeah.
people.
Hi,
All right,
Bolade.
bye. Bye.
Bye.
Joke, bye.
Bye,
Shama, bye,
Hoso.
everybody. Bye.
Bye, John.
Bye. Bye,
Bye,
John.
everybody.
Hi,
Have a good
Dolapo.
one. Bye-bye for now.
Bye, Auntie, everybody.
Bye.
Bye, Dolapo. Bye, Obina.
Bye, Obina.
Kemi,
Bye,
be well.
Bye.
Bye.
Bye, Busayo.
Oduayo. Olalekan. Maurice.
Pekumo. I like calling the name Pekumo.
Bye, Joke.
Bye, Simi.
Bye,
Thank you,
Simi.
Simi.
Bye, Daniel.
Oh, well.
Bye.
Bolale, you're not showing
Good to
this.
see you.
Bolale, you're not showing your face at the end. It's not good, though.
When
It's not good, though. You're not showing your face at the end. God is watching you.
Bye, Bolale.
Good morning.
Yeah. At next hour, you're not showing us your pretty face.
Morning.
Good morning.
Bye.
Bye, everyone.
You're signing out. Jumoke, I see you. Daniel Tolulokpe. We are not signing out. Finally. We always say finally. Until we not end.
5, 4, 3, 2,
1.
Bye.
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 Yeah.
Okay, Chi. You know I made you the host.
Okay.
So you have to end it.
Oh, that's true, Seth.
Yeah.